First of all, I want to apologize yesterday. My wife sprung something on me last minute that I wasn't aware of. She's pretty good about letting me know what my schedule has to work around for family matter stuff, and wasn't able to do the Twitter space yesterday. So it is what it is. Today is Sunday, so I do things, in my own personal faith. I don't go to a church per se, but I do spend time with the Lord every day. But I want to be spending time with Him the majority of today. So today won't be one of those long duration, just keeps on going. And some of you might not be happy about that, but it's okay. It's okay. It'll be concise and useful information. And it's going to be something of a number of questions I want you to go into this new week with and reflect on how you're usually looking at the marketplace, how you're looking at a market, how you're looking at price. Maybe you're using tools that are not mine and you're just here because you like to listen to the rhetoric. Some of the questions I'm going to ask you in this space, don't just think about them and then put it off. Write them down, because they're going to be impactful when you get to next weekend and you reflect on it. You'll see things obviously a little bit differently. That's the goal. If you're actively engaging with what I'm going to suggest to you, you will see things differently. And it may be an epiphany for some of you where you get your aha moment. But since I started the 2024 mentorship on YouTube, I had a lot of feedback, and it's been predominantly very positive. In fact, like most everyone's saying the same thing. This is the best one. I should have been teaching it this way from the beginning. And I understand that, but I also remind you that these are the things that I didn't want to teach. It's not everything that I don't want to teach. It's in the area of what I did not want to teach. And it's not necessary, because you can see I have students that have made money. They're consistently profitable, and they get payouts, and they live stream. They share their executions and whatnot. So they didn't need to have what was in 2024's mentorship, right? So I want to ask you a question about what you've seen so far. Obviously, when I live stream, I'm telling you what price should do. And I'm doing it over a 1-minute chart and many times over a 15-second chart, which affords me next to no time to have any other expectation on what I think price is going to do. And because I'm streaming it with the lowest latency, that means when I'm saying something and I'm checking my audio, it's usually a 4-second delay. So there's no way that could be faked. There's no way that could be another source of information I'm drawing from and then picking the right one and then saying, here's what I did right today. Okay, so I've basically canceled all those arguments so far, and I've shown you executions based on the logic that I'm teaching. And this week we're going to be doing some work with limit orders, and I'm going to show you how to go in and take lots of executions. As a reminder going into it, and I will have this actually typed out in a watermark, because I know some trolls want to use these types of opportunities to make it look like I don't know what I'm doing. I think I'm pretty much communicating I know what I'm doing. I have trolled in the past. I've done some silly things to get people talking, and it works. That's why I do these things. I'll say something to get people inflamed, or I'll make a snide remark about something, and it gets people talking. That is my marketing mechanism. That's how I do it. I don't have to pay for marketing. I get people twisted up in their panties, and then they go run around and they try to get their friends to come over to me and troll. And then their followers see it, and then they get intrigued by what it is I'm doing, and then all of a sudden now they're a student. So I am the master of harvesting other people, and I don't have to pay for it. I'm a master of manipulating the perceptions of people to get them to come and look and see, and they can test it themselves. And anyone that puts their head down to the charts and listens to the things I'm teaching, as I'm going to talk about today, it's a real hard argument to walk away from and think that you got it in the bag, where you're right and what I'm teaching is wrong or a fallacy, because it's not. What I'm actually showcasing and teaching is the market itself. I'm showing you entries to the tick around the very specific PD rates I'm teaching that are supposedly non-existent or supposedly rebranded from somewhere else, but you can't find it anywhere else. At some point, the folks that keep saying nonsense about what it is you're learning, or maybe that you have already learned and you're not bothered by it and you want to move on. I talk this way, not because of insecurity, because there's always an increasing number of new people following me. And I only have a small little window to capture their attention and make them think about things critically, because the TikTok mentality is very pervasive right now on social media. So if you don't convince me in 30 seconds, then I'm moving on. Not that I need anybody. Like, I don't need anybody to come to my YouTube channel. I don't care if you ever buy my books. I don't care. I don't care if you like me. I mean, I really don't. That's not what this is about. I made an arrangement and a deal, and I'm living up to it the best I can. So if you choose not to use me as a mentor, that's fine. There's other things out there that you can use as a reason to get into a trade. That does not mean that's the reason why the market went up. And that's why you have to embrace these ideas of, well, the markets are random, so that's why we have to use money management. Okay. I don't like 50-50 odds. I don't like it when it's iffy. I like to know when everything is in my favor. And for most people, that sounds like that's an impossibility, but I'm showcasing it in live stream. I'm showing you where something might look like a setup that someone that watches my YouTube video one time, or they watch a sampling of them, and maybe you've done this yourself where you just want to go in and just cherry pick certain things. And if it's a real long video, I don't want to watch that one. I want to go to the real short ones, or I'll go to another channel that's taking pieces of what I say, and you're not getting the full panoramic immersion of understanding what it is I'm talking about. And it's fun seeing everybody with their YouTube channels and they're putting little clips together and they put music behind it and it sounds like Alan Watts talking to you, right? I'm a fan of Alan Watts, by the way. But the point is missed in that. It's wonderful engagement, traffic inducing things that other people are helping my channel with, but you're really not learning that way. It might cause a concern or a question to arise. I want to know a little bit more about that new day opening gap, or that opening range gap, or what's these inversion fair value gaps and whatnot. So it causes a matter of inquiry, some curiosity. They may not come to my channel or maybe even listen to these spaces with the express purposes of wanting to become a student of mine because they've heard things about me and whatnot. And that might change because of what they see and what they hear. And what they've been struggling to try to become, which is consistently profitable, that may not have been afforded to them based on what it is they've been trying to employ as a methodology or learning from someone else or using some archaic retail logic that is absolutely flawed. And I'm going to talk about how all of those retail concepts are flawed today and how you can adopt the mindset to cannibalize all of that, because that's exactly what I do. I do not trade with any retail logic except for noticing it in the chart and then fading it. That's the mindset of smart money. Smart money does not look at a wedge pattern or a bull flag pattern or a broadening top pattern or a cup and handle pattern and says, wow, this is it. This is where I'm going to get in here and trade. I look for those types of scenarios when it's diametrically opposed to where I believe that the algorithm is going to reprice to. And when I have those conditions, I'm going to trade with my largest leverage. If I don't have a retail concept there, it's not necessary. I'll just use a standard measure of leverage. It's not that big of a deal. But when I have everything in my favor, and I know I'm in an arm wrestling match or a tug of war with John Q. Public, who just read a book, or he just opened up his TD Ameritrade account, and he's never traded before. He's never studied price action. He just thinks he's going to try it out. If they're willing to share their opinion about what they want to see in the marketplace, and there's a classic retail pattern in price that they're mentioning, and I know that the market's most likely going to go the other direction, I'm literally going to enter right where they're trying to go the other direction in. And I'll have next to zero drawdown. And all you have to do is look at my executions, and you'll see that. When I'm entering, it's immediate delivery to covering the costs of a spread or commissions, and it's already in profit. Because if I'm short, I teach my students the same way. You want to be selling short when the market's going up, because that's the fastest route away from your entry. Because to go lower, I'm expecting it to reach to some kind of premium array. Okay, that's something that's algorithmically delivered for a last chance to get in, basically is what that is. And when you're bearish, every PD array that's a premium, while that market is in a sell program, that means it's getting ready to deliver sell side to sell side liquidity. That's the paradigm. That's the methodology of watching and viewing price action correctly, not with pseudo order flow on level 2 data. That's all scammed. That's all fake. Sure, there's some real orders in that, but they're not all real. And because if they can be manipulated, that's a wonderful tool, like a red herring. Dangle a whole bunch of numbers at a particular price. And all of you guys that sit out there, and gals, that sit out there and you watch these things, these depth of markets, level 2 data, volume profile, VSA, and all that stuff, you get tricked all the time. And I'm sitting on the sidelines in the quiet, not saying anything in your live streams or whatnot. And I'm watching the people that see those numbers, and they get real excited. And the more people talk about a very specific level, because look at all those numbers. There's a so-and-so number of contracts. There's a so-and-so number of orders sitting at this level. As soon as someone says that audibly as a YouTube live streamer, or their chat box starts talking or calling out very specific levels, because there's a certain number of orders supposedly above it or below it. As soon as I see that, I am ready to pounce. Because what that is, that's an indication that the weakest minded trader, the weakest equipped speculator, the most likely to lose individual in the marketplace is sharing their unlearned opinion at a real-time moment where I can measure that against what I see in price. So that's the absolute only reason why I watch majority of my live stream people that I like. Now, Tanya trades is my student, so she trades with my concepts. I don't fade her. I don't fade her chat. I just like watching her. So I might go into her live stream and say, hey, how you doing? Or just watch this level or that level. But I'm not trying to engage or manipulate that chat. I'm watching her for the sake of watching her because she's done well. Everybody else I'm using for their chat window. That's why I'm there. And sometimes the streamer might say something that's silly and it makes me laugh. But other than that, I don't want to follow anybody else because it's just chaff. But when I'm looking for a setup, I will absolutely go into the live streams and get a feel for sentiment, because it gives me a real world, real time sentiment reading from less informed individuals. And that might sound mean spirited. It's not. It's not. If someone at a company was saying, hey, look, we're getting ready to introduce a really amazing new product line of something new and innovating, and you were a friend of that person, and that company was traded on the stock exchange, you have basically an inside tip. And you can frown on that and call it whatever you want to call it, okay? But if I had a long-term friend like that and they were saying, hey, look, this is ready to come out, I can't tell you exactly what it is, but we're going to have something amazing hit the market, I'm probably going to go in there and buy some call options, because I have a perspective that's being afforded to me that I have faith in probably being correct because they're there. Well, if you look at the retail mindset, 90% of them are wrong. So if they're doing you a favor by collectively coming out and saying, this is what they believe, the market's going to go up or go up to this level or go down to this level, they're giving you a gift, because they're giving you better than an overbought, oversold indicator, because you can't personify the aspects of fear, greed, FOMO in just the number crunching of a overbought, oversold indicator. But if you could combine that with market sentiment, when you're bearish and that overbought, oversold reading is overbought, and it maybe is having a bearish divergence. But at the same time, now you have real people chattering or posting on their social media accounts. Get ready for the move. It's getting ready to happen. It's going to go up. And the more adjectives that they use, that means they're really trying to convince other people and convince themselves. So that means like that's the most overbought of overbought readings as you can have. And it's not necessary to have it on a plotted basis, crunching a period of candlesticks or bars over the last number of 10 or 15, 20 handles, or not handles, periods that you're going to use to measure for the overbought or oversold indicator. So I used to, as a young trader, I used to use the overbought oversold. And then I discovered that it's not necessary. Just looking at the range and then understanding what the PD arrays are inside that most recent range from the recent high down to the recent low. And you can trade just inside that range and never trade outside of it and make all the money you'd ever want. And if you write down the things I'm going to suggest to you today, I promise you they're going to serve you well. You'll have a better understanding about how the markets are booked from the market maker's perspective, not a dealer, because we're going to talk about that, because I'm going to make a very strong contrast between what you think a market maker is and what the market maker is for real. And why I'm always on side. How many times have you seen me do something wrong? Since I started doing the 2024 mentorship, how many times have you seen me done wrong? 0. I can tell you what fair value gap is real, which one's not. I can tell you how something's going to fail, what direction it's going to go, what liquidity it's going to reach for. That to me is boring. Okay, but that's a skill set that you all are striving to learn. And I'm proving it with no confusion. It's right to the point. It's in logic. I'm pointing to it. I'm explaining to it why it should do this, and it happens. It's not a pre-recorded session where people in the past have said, I'm doing multiple chances and then using the ones that work to look good. If you're seeing 7 weeks or so of me doing it accurately, is it a question why that you don't see losing trades by me? Because I know what I'm looking for. Now, if I trade every single instance where there could potentially be a trade there, and I don't filter it with my experience and the other things that I'm teaching as protocols, that tells me, yeah, this isn't probably going to be panning out for me. So while that might be noteworthy to mention while tape reading in the live stream, I'm not going to execute on that one because I know enough that tells me that that's not likely to deliver. So I'm going to wait for the next PD array. It's kind of like you're walking down the street. You know that bus is supposed to be there at 10 minutes after 10. No pun intended. But it just so happens that they got there a little bit early and maybe the bus driver's a little jerked out of gear and they don't sit there long enough for you to get there and get on the bus. Okay, no problem. Just sit there and wait 20 more minutes. 30 minutes or whatever the schedule is, and it'll come back around. That's what it's like when you have to understand my PD arrays. I don't have to have every single entry I showcase. I want to have the highest one that's afforded to me if I'm bearish. I want to have the lowest one that's afforded to me when I'm bullish. But I might not be there at the time when the chart does it. I might get an alert that tells me, hey, look, it's done something. And then by the time I'm seeing that and then going to my charts, there may have been a very fast displacement. And I've missed the ideal lowest entry or highest entry. I'm not freaking out about that. I have 81 ways to get into a trade, and not all of them appear in every single price run. I just look for the ones that appear. And because I know what they look like deer tracks, and I've seen it with my dad taking me out into the woods, that's proverbial. That never happened, but I've used that analogy. Because I've recognized it, because I know what it looks like in the past, and I've traded it and executed on it. Out of those 81 specific PD arrays that may be allowed for me to enter on, there may have only been 3 that actually formed in that price run. It doesn't mean the other 70 plus aren't good. It just means that the algorithm did not implement them. So I know what I'm looking for. I know what time my setups are going to form. That's the most important thing. I know what time. I can set my entire schedule around 3 or 4 or 5, 6, 8 different types of trades that I know I can do one trade, walk away from the charts, and come back 5 minutes before the next one was supposed to be there. and not be there when it happens? Can your mentor, can your school of thought, can the people that wrote the books that you're believing as a religion, can they tell you that? Can they demonstrate that? Can they do it consistently? I bet you they can't. And I bet you can't. There's something different here, folks. And I'm trying to, without just taking you right to it, because we're gradually getting there nonetheless, but I'm trying to allow that moment of astonishment where you see it and it jumps off the chart and you're like, oh, and for some of you, you're starting to see some of those things in the comment section. And I'm allowing you to keep that to yourself. The worst thing you can do is go blab it on social media, because then you'll ruin it for everybody else. Let them have that same moment of astonishment. Because if they don't, it's okay. Because when I wrap up the live streams going into the last week of October, because we're not live streaming in November and December. The holidays, that's my time. I'll do pre-recorded videos whenever I find a time to do it, but live streaming stops the last week of October. So by then, you'll know everything that I wanted to teach in the 2024 mentorship. So it's not like a long drawn out process. You'll have wonderful resources to tap into, protocols, processes, procedures, and some of them we'll cover today. Okay, but I think most of you have realized that there's a little bit more than just simply classic support and resistance or what you thought was supply and demand. There's something else totally different. And the first and foremost factor is time. And none of those other applications or approaches to trading ever reference time. And that's why 99.99999% of every aspect of retail trading is flawed, because they don't have any reference to time. It's funny because there's people out there that do mentorships. They talk like they're special in trading. They talk with my vernacular, my language. They use my words, but they claim they didn't learn from me, and they still ignore the fact, even though they might say there's an algorithm. If there's an algorithm, it has to run on time. So right away, you just eliminated the frauds right there, okay? Because they don't know what they're talking about. If anybody submits the idea that that market is driven by an algorithm, and there's a lot of people that don't. There's a lot of students that are watching me on YouTube that are very respectful when they leave their comments and say, this was a wonderful teaching on price action. Even though I don't believe there's an algorithm controlling price, this was very illuminating. Well, I can appreciate that. And that's all I've asked for. I'm not trying to convince you. I just have fun doing it, where I'm ribbing people, twisting the knife proverbially, just to let them know that I find it astonishing that you can't see it. Because if I can time my trades and tell you what time they're going to form, and I can tell you what price they're going to be at, look at this week. Look what I outlined just this week and what I executed on. Folks, that's perfect. That's perfect. And it's the logic that's been explained to you. And it's using something from the previous day that nobody else would have referred to. First presentation, fair value gap. I've mentioned that in passing in Twitter Spaces last year. I took these little hints in these long discussions because it's just too good. But if you listen and you take notes and you think, why did he say that? That is a clue. That's a little bit of a little golden nugget just buried underneath the surface of that discussion. It doesn't take much digging for you to discover what it is. But if you just listen to me and you don't go into your charts and examine what could be seen around that thing he just mentioned, all of a sudden when you start studying it and looking at how price behaves around it, and you hear that I'm always referring to the last 3 days, the last 3 days, the last 3 days, because swing highs form with 3 candles. Inside of that element of time of the last 3 days, you're never going to miss that real sweet spot. If you're trying to trade swing trades, like if you don't want to be intraday trading, you want to trade a little bit longer term perspective. You want to trade for the full weekly range, or you want to trade for the whole month's range, or you want to trade for several weeks that may be lasting several months, maybe 6 months to a year. Long-term position trading. I don't personally have the appetite to do that. I can't sit still that long. I have hyperactivity basically. I have to see. I know that I can take what I have and run it up with velocity with multiple transactions instead of just taking one and holding on to it and submitting to whatever it wants to deliver on that one trade. There's nothing wrong with that. Like if you're running a 401k for yourself, a self-directed IRA, and it's advisable that you should be doing that because you get wonderful tax treatment and you can balloon the account up big. And some of that trading can be done with long-term position trading. The only problem with this is, and this is why I'm really glad I've been speaking predominantly on intraday short-term trading, is because they're trying to implement these laws that are going to be unrealized taxing unrealized gains. So that means if you're holding stocks or positions that are not yet cashed out, how are they going to justify charging a tax on something that you haven't even made the profit on? It's an unrealized profit. That's corruption. That's the highest form of corruption. And people don't stand up against that. And we have a real problem here because that is absolutely asinine. No one should ever agree to that. Republican or Democrat, nobody should see that. But if you're day trading, if you're intraday trading, you're getting in, you're getting out. You have that profit. It's realized. And if you have a good CPA that can help you do whatever you can get in terms of write-offs and reduce the legal thresholds of your personal taxation, you should do that. But if you're doing things like fund account trading, you have a different tax treatment. You can do things differently that someone like myself, if we're trading in live accounts, that profit is treated differently versus what you make through the prop funds, because that's not even real money. It's not real trading. Like you're getting rewarded for playing the lottery, fantasy football. That's basically what that is. So that type of income can be treated differently, and it's wrapped in kind of like the same thing as a YouTube earner. Any money that you make as a YouTuber, clothing, travel, cars, all the glitz and glam that makes up what your image is. You can get a lot better tax treatment there than what you do with your trading profits in a real account. So don't laugh at these people that are doing this stuff online, okay? Because they've listened to me in the past where I said, if you want to get the best tax treatment and you have a personality, do this online. If you learn how to trade, all of you listening can learn how to do this well. And all of you have diverse personalities. And not all of them are going to be interesting. Like mine, I'm abrasive most times. And either you love me or you hate me. And that's exactly how I want it. I don't want in between. I want you either love me or you hate me. And either one I'm satisfied with. But you can be a middle of the road personality if you learn how to trade well and put yourself together, online presence, and live stream yourself executing. You're not trying to teach my stuff. You're simply just doing it. And people want to see it. There's so many students of mine that come to me wanting to get into private mentorship when I'm teaching for free here. And they'll say, can you at least turn me on to your students that are really good and let me follow them? Why would they want to do that? Because they want to copy their trades. So if you have a skill set in this, you have a blank check to make as much as you want to ever make. And because you're live streaming it, you ain't got to worry about anything being leaked. If you do a mentorship, it's getting leaked. If you do a signal services, they're going to get leaked. But when you do it out in public, you've made everything impossible. Why would anybody try to buy something that's already available for free? That's why I'm killing everybody right now. I'm literally murdering them. I'm burning the village, okay? And I'm having fun doing it because you all had your fun with me. Now I'm showing you who's who. Don't waste that opportunity of income and that different tax treatment. If your skill set is afforded to you and your personality allows you to be out in front of the public and you take a trade and you call the market, I would watch you. As a student, I would love nothing more to be able to see something like that. I watched Tanya. She's got her own little personality and it works for her. People try to tell her what to do and she does the right thing. Listen, this is the way it goes here. And you don't like it, you ought to watch other people, okay? And you got folks like Patrick Whelan, awesome personality. He's like a heel in wrestling. Like he's the perfect bad guy, okay? But he just sucks at trading. So if he can learn how to trade, and man, he would be a phenomenon on YouTube, like freaking crazy. He'd have the best of the best. He'd like be the best Ric Flair in trading. You love to hate him, but you can't deny once he learns how to trade well and consistently not blow his accounts, he would be a huge draw for people to watch on YouTube. And that's the only thing I've ever been interested in. I want to see him get better at it. But a lot of you don't want to do those types of things. Maybe you don't have the skin to do it, because if someone gives you something critical, it'll hurt your feelings. You won't want to do it, or you'll clam up. And it's not for everybody. But the main thing is this. You're seeing a different level of understanding and price that is just still scratching the surface. Just scratching the surface. And every new revelation that I'm sharing is opening up a huge level of understanding about how everything else is working. Contrast that with you go into the day and you're waiting to react to something. As a retail trader, you're waiting for some kind of price moving away from a VWAP, or you're waiting for some kind of, I don't know, indicator to tell you it's doing something, or some kind of pattern that is populated on your chart as an overlay that tells you there's supposedly some harmonic pattern there. And you're trusting that stuff. But you're admitting to yourself that, hey, look, nothing's 100%. If I'm wrong, it's okay. It doesn't mean that I'm going to keep losing. It just means that I'm okay losing half the time. And to me, that makes no damn sense. But gamblers do well with that. Professional gamblers can do well in those types of situations because they know how to bet heavy when they feel like they got it in their favor. And they'll lose a lot of hands, and they'll find themselves at the final table at the World Series of Poker. Watch those competitions, and you'll see the same faces finding themselves to the latter stages of that competition more times than anybody else. And that was always a fascinating thing for me in the 90s. Like, I watched that all the time, and the same people would be at the tables, the last ones. That's not coincidence. They know how to play the cards, and they know how to play the people at the table. And that's exactly what market making is. That's what it is. It's bluffing. It's enticing. Throwing down a hand that you know you probably could play, but throw it down. And what they thought you were playing with, and you're confusing them. That's why if you go to a casino and you sit down at a blackjack table, they bring out a brand new shoe, okay? And you start playing the table. When you got a good hand, throw it down. Lose money doing that. Throw it down, throw it down, throw it down. What you're actually doing is you're going to mess up the shoe. And in 15 minutes or 20 minutes, they're going to come out and change the shoe or ask you to go to another table. That table's closed. Don't believe me? Go fucking try it, okay? Because the eye in the sky above you, that's who you're trading. That's who you're playing cards against. It's not the dealer. That shoe is a stack, okay? It's a stack, meaning that there's a specific order of the number of cards in a row that's going to be this rotation, okay? They're not randomly shuffled. They're not stacked in there where anybody has a free chance to get the random take of a card. That's not how it works, okay? It's not how it works. When someone's winning consistently, they will come out and they'll change the shoe. The shoe is that little box, in case you didn't understand what I meant by that. On the table, there's this big box of multiple decks of cards, and they're all stacked in there in a specific order. It's stacked in a way where anybody that understands the game of poker, it will lead them to take a specific card and say, okay, I'm going to try to play this, and I'll discard that. It's not perfect. It's not perfect, but it at least primes them to play the cards that they're given. But if you start making consistent wins at that table, they're going to come out and change the shoe. Not because they ran out of cards. They want to disrupt you because you have now counted the deck. You have that shoe understood. You know exactly what's coming out. That's why card counters are not allowed to play in casinos. Let me tell you something. I don't care. This is my perspective, Lynn. You can have a different opinion. But if someone comes in, even with partners, and they're counting cards together, and they have electronic devices telling the other person at the table, hey, look, this is good, this is not good. How the fuck's that cheating? That's not cheating. They don't know what those cards are. They don't know what they are. They're just counting. They have a card counting system. They don't know what card they're going to get. They're just playing the odds of what's still available in that deck. How many face cards are still there? How many aces are still there? And when the deck or the shoe goes cold, they got to get away from that table. But they'll cut your arms off in casinos. You start taking big money from them like that, you won't leave with that money. You won't be allowed to cash those chips in. And they're going to try to prosecute you. Imagine that. And here they are cheating the entire time. Cheating the absolute entire time, guaranteeing that you have all the odds against you. But when you start winning, oh, no, you're a cheat. We can't have you here. You got to go. The market doesn't like card counters either. And when you know, they make it a little bit harder for you. I'll just say it that way. Okay. So what you want to do is learn what it does, how it books price, and then casually grow over a period of time. Don't flash in the pan, go out there and try to run it up real quick. Because all you're going to do is put a spotlight on you. And that will start being a problem for your trades. They'll slip you. They'll requote you. Other things that I'm not going to talk about here. But same treatment as a card counter. Let's put it that way. But just in a different approach. So if we can agree, just for the sake of this discussion, just if you don't believe there's an algorithm, this, for the purpose of me explaining something to you, just pretend for a moment that you do believe it is. Okay? And then at the end of the conversation, then you can move back to whatever you want to believe afterwards. But if there is an algorithm and it controls price and it only affords the market to go so high or so low for that given day, that means from the time it starts trading to the time it settles for that session, all of that price fluctuation, everybody in the retail perspective are all going to see it as random price delivery. And there might be a pattern there that may justify them taking action on it. So they have a religious belief in some kind of pattern. For the sake of the pattern, they're going to buy or sell. And I'm trying to offer you a different perspective where you should be thinking, okay, what is the prevailing market sentiment right now about that given market? Is it likely to continue higher or lower for the next several days, up to the whole duration of the new week coming? Okay, because right now while we're talking, it is 40 minutes after 10 a.m. Eastern time. So we have several hours before we get to the new week opening at 6 o'clock Eastern time. So the markets are flat. They're not trading right now. And you should be thinking about what that monthly, that weekly chart is doing. Would seeing the price dropping lower to an old low or a gap of some sort, would it be beneficial for smart money if they were short? Would it be beneficial, based on what that monthly and weekly chart shows right now, would it be beneficial if the market was likely to go higher if smart money was long, to go to an old high or go to an inefficiency above where we settled at on Friday? That's your first question every single Saturday or Sunday, or if you do your analysis in the Friday evening or whatever. But before Sunday's opening, you need to do some reflecting on the monthly and the weekly chart, because it should give you a long-term, slow expectation where price is likely to go. And if it's not obvious, then drop down to the next lower time frame, which is going to be the daily. If you can't ascertain where the market's likely to draw to on the daily chart, then you absolutely have no business dropping down into the lower time frames, because you will be gambling. You will absolutely be gambling, because you won't know, trading on these smaller time frames, when that next trade you're taking is actually a higher time frame entry that's going to be the biggest displacement. And if you're trading without a stop loss, which I see a lot of that, just look at the screenshots everybody's tossing around between each other on Twitter. on Facebook, and on Instagram. They don't even put a stop loss on, even to save face, because they know if they put a stop loss on there, even though they don't have one while their trade is panning out in their demo account, they don't want to put that stop loss on because everybody will know with a record that that's where their stop loss was. And when the market eventually goes down to that level, they would be technically stopped out because they don't want to get stopped out. They want to hold on to something that if it keeps moving, they can come back and say, see how smart I was. So that's why when I look at people and they share charts and they say, I got the same trade as you, ICT. First question is I want to see the execution. I want to see the price, not the line, because the line could be 3 days ago. And it just so happens to look like it moved away from that price level. So I call my own students out with that bullshit. When I see people share a trade and they're a student of mine and they show their entry and they show they're getting ready to get their limit order tagged, but there's no stop loss, I'm not congratulating them on their good entry. I'm not congratulating them on the right draw and liquidity as an exit. I'm criticizing them by saying, where's your stop? Use a stop. That's mentoring. That's a mentor. That's someone that's trying to teach responsibility. I'm going to find your weakness because you're ignoring it and you need to work there. And in the marketplace, it capitalizes on everyone's weakness. What are the two most critical ones? Greed and fear. All it has to do is operate on those two pretenses. It's going to either scare the shit out of you or it's going to entice you that you're going to make a lot of money. Either one of them is going to cause action. It's going to cause a reaction, a response, a cause and effect. As a human being, you don't always know how you're going to react to something. And especially in trading, because most people don't do a lot of documentation stage of the development in the beginning. That means journaling, tape reading, identifying in laboratory experiments of watching price action, recording what your emotions are. Even though there's no money on the line, even though you haven't even pressed a demo entry, you are emotionally committed to the outcome of whatever opinion you form based on that chart at that time. Don't believe me? Think about this. You've opened up Eurodollar. You opened up Japanese yen. You've looked at coffee futures if you're a commodity trader. You're looking at Bitcoin if you're a crypto crazy guy. And now for futures, you're watching NQ, Dow, NASDAQ. And you look at the chart right away, you're like, oh, I think it's going to go here. And it doesn't go. Oh, it doesn't matter because I wasn't in the trade. You quickly dismiss it. You quickly push it away like, oh, it doesn't matter. No one saw me say that. No one heard me think that. I didn't press a demo entry. I don't have to reset a demo account. I didn't take a loss in my funded account challenge. I didn't take a loss in my funded account. I didn't lose money in my real account. You're making excuses to push it aside. That's the worst thing you could do. You need to explore why you felt that impulse to think, oh, it's going to go up or it's going to go down to this. When you dismiss those instances where you have impulsively committed to some outcome and it doesn't work, the first thing you want to do is push it away like it didn't happen. Wrong. Because when you start trading with real money or in a manner where it's going to take from you money or prevent you from reaching your funded account because you're paying for those accounts. And if you get wrapped up in this loop of ignoring your faults, you keep doing the same thing over and over again, failing and blowing the account and blowing the account and blowing the account and never fixing the underlying issue. And the only thing that increases in fervent pace is your pursuit to quickly reset the account or pay for a new challenge. And that just proves that you're out of control. You're not in control. You're emotionally stimulated beyond all comprehension. You're hopped up on goofballs. You don't even recognize the fact that you're doing everything wrong because now you're now more passionate about doing it faster and quicker, and that way it'll cancel out that discomfort that you keep blowing the accounts. And you look at these people that are honest online and they're saying that they've reset their account 100 plus times. I don't know how much that stuff costs. I've never done it, but that sounds like it's pretty expensive over time. And are you willing to reset 100 times and never make money? Because that's the equivalent of someone that goes to a casino and sits there knowing damn well that they have taken every bit out of their bank account. They only went there with a certain dollar amount. This is all I'm going to spend. But because they can't get out of that loop, that gambler's loop, where they don't recognize the tells that they have in themselves, the self-destructive impulses that you know, if you've been paying attention, you're about to start doing that. If you don't recognize those things, the market is going to capitalize on that. And it makes it feel like they come after you specifically, because you've ignored all the warning signs that you as a human being keep materializing and manifesting in your behavior, in your thought process, and in your executions, or lack of executions, or lack of using a stop loss. That's why in the beginning I tell people it's going to be 6 months before you should ever be pressing the button with money behind it, because not all of you have the same measure of character flaws. Some people have a lot of them, and it may require longer than 6 months. It depends on how troubled you are. But if you're a very detail-oriented person, you're honest about everything, and you're honest about yourself, and you're not trying to be something that you're not pretending to be someone that's more equipped than you really are, you're probably not going to require 6 months of figuring out what your problems are. But you have to identify what they are, because otherwise you won't realize that that is your downfall. And what I'm going to teach today is going to be the reasons why that takes place. You haven't identified how you're falling victim to yourself. Okay? The market's not beating you. You beat yourself. The market didn't blow your account. You blew it. 90% of the time, you knew before you took that last trade that blew your account, you shouldn't have done it. And you shouldn't be doing it. But you didn't stop. Because you're caught up in that gambler's loop. You're numb to it. Oh, well, if I blow it, I'll just reset it. And then I'll feel fresh with a brand new start. But it doesn't feel that way, does it? Because now you're scared. The next trade you take on your new one, I don't want to have a losing trade because that means it's going to freak me out. I'm going to jinx it. And then I'm going to go right back in the same thing. But you lie to yourself in that last trade before your account gets blown. If I blow it, I'll just reset it and I'll be fine. But you're not fine. You're building thicker and thicker scar tissue. And it's hard to trade in that. And if you're trying to be an online personification of a successful trader, but you're not proving that because you keep having to reset your accounts, that is even worse of scar tissue. So it's unfortunate because I teach these things and I prove it, and my students that do well and listen to it, they stand out. But I do have students that can trade, but they don't know how to wrestle themselves. They haven't done the documentation stage of their own development. In the beginning, they didn't do the things I'm teaching in this mentorship 2024. They have not spent any time doing that. So that's why they have hit and miss results. That's why they can make money. They can get a payout or two and then blow it. And they go into a tailspin for months. And then they might make a little bit of money again down the road, but then they blow it again. What's broken? Them. They are the underlying issue. You are always going to be the underlying issue. It's not the method. It's not the market doing it to you. It's you. So with that foundation, I want you to think about how 99% of retail traders have no concern for trying to make themselves prepared for the ebb and flow of profitability, losing in the beginning. They just want it to be a lottery win, and it's off to the races for the rest of their life. They just keep making more money. The way the market capitalizes on that weak mindset is because they're ill-equipped. The first thing that the market does every single day is it hides the narrative. What is a narrative? What the market's actually going to do for the day that makes the daily candle. That's the real candlestick range theory. Not that bullshit you see fucking panded around on Twitter right now. Nonsense. The narrative on how that daily range is going to form. It starts with, are we going to have an up close or a down close on the day? You're not trying to predict the closing price. You're just looking at the monthly, the weekly, and the daily to determine what is the probabilities for the market to go lower and close lower, or go higher and close higher. What would be things that would help with that? Well, if the monthly and weekly chart are reaching for an old high and they're in close proximity to it relative to that time frame, it still might be hundreds or 1,000 handles away still. But you can see clearly that it's drawing to that higher time frame area of either inefficiency or an old high or an old low, something to that effect. And then in the daily chart, you start seeing each individual daily candlestick still moving in that direction, even though they may have 1 or 2 days that are opposing that. If we're bullish, you might see 1 or 2 down days in the week. But majority of the days of the week, majority of each individual daily candle is usually an up day. That means it's confirming that it's gravitating towards that weekly or monthly draw. And by hiding the narrative, I mean that they're going to cause some kind of initial excitement. That's the Judas swing in the morning. Okay, and what they'll do is they'll use the 8:30 news time, even if there is no economic calendar release. 8:30 still creating some kind of a Judas swing. Now think about that. We would expect, the news is going to push the market around. That's what they'll say. The news pushes price up and down. No, it doesn't. The buyers and the sellers at the time of the news, when nobody could even get trades in, but yet it's buying and selling pressure. You see how fast this shit falls apart? But because they say it to you so many times, and it's in every book, and everybody just regurgitates it and says the same thing over and over again. Hitler proved it. You tell a lie big enough and loud enough and long enough, eventually everybody will believe it. But when I'm standing here and telling you, this is what it really is doing. And then what I'm telling you it's going to do, it does it. And not that I'm trying to prove that you need to be right, or that I'm trying to prove that I'm right. I'm just saying the logic is right. That's the point here, okay? So it cuts through all the bullshit that retail stuff leans on and has a religion around. No matter what school of thought you have, the market, okay, if we can personify the market like some people like to believe it is, it's the buying and selling pressure, okay? Okay, how is it that the market collectively decides that it's going to run against the traders that use harmonic patterns that day? And maybe not Wyckoff traders, or the supply and demand guys that have been using the demand zones, if that's what they're going to use to get into their trades. Why is it that they get targeted that day and not the Elliott Wave traders? Because they're never all in agreement. And when you take a step back and you think about all this stuff like that, it's like there must be something else going on. Because is it like, okay, this week we're going to let Elliott Wave traders do well, because you got to keep the book sales and course sales and the mentors that teach that bullshit. We got to keep them making money. And then we got to let Dow Theory and Gann and Hurst cycles do well in the coming weeks too. And then we got to come back to point and figure because there's a lot of old heads still trading with that garbage. So how can you kill them all and not have to do very much and make it simple? Run old highs, trade to inefficiencies. It's simple. You kill everybody. The algorithm doesn't need to know Wyckoff theory. The algorithm doesn't need to know what harmonic patterns are in play right now, what Gartley patterns there, what bat patterns there. I know all about all that shit, the butterflies, all that stuff, okay? The only butterflies I see in trading is my students when they're doing it right. They get butterflies, okay? There's no fucking butterflies in patterns in the charts. That's nonsense. It's garbage, okay? It, again, is another religion. It's a fairy tale. The truth is the market only goes up to tap into pending buy-side liquidity. Or it goes up to rebalance and or redeliver to an inefficiency. That's all it goes up for. That's the only reasons why it goes up. The market goes down to trade into sell-side liquidity, below and low or relative equal lows, because there's pending orders down there. Or it goes down to a inefficiency. That means like a fair value gap, below market price, to reprice to or rebalance that inefficiency. That's the only reason why the markets go down. I'm telling you to just go into the market with that mindset and forget everything else. And suddenly the charts will start talking to you. It'll be clear what it's doing, where it's reaching for, where it's not going to go. Then when you understand the elements of time that I'm teaching you, you can time when it does these things. Wyckoff doesn't ever teach time. Elliott Wave does not teach the times I'm teaching these macros. It's not there, folks. Supply and demand, never mentioned it. Larry Williams never mentioned macro times. And he was my first mentor. Buy everything he has in writing. Buy every single one of them, okay? And I promise you, you'll never see that stuff there. He wasn't the inspiration for the macros. That's not where that came from. That's not where that came from. What's another one? George Angel. No mention of a macro. His spyglass, his LSS system for day trading the S&P makes no mention of it. Zero. Nope. So if we understand that the market makers they are the handlers, the owners of the algorithm, the price engine. The engine itself that delivers price, and I'll explain a little bit more detail what that means by a price engine and how it delivers price. You're gonna learn a lot today, okay? But the algorithm is owned and handled by the market maker. It's not a single person. It's an entity. And you're not going to meet them. I'm not going to be able to point to this is where they live, this is where they're at, but it's an entity. Okay? It's a collection of people that they run it. Like a casino. Okay? So we as speculators, as traders, we go in and we buy and we sell at the price that is offered and controlled by said algorithm. That algorithm has a predetermined script. This is how high it's going to go for the day, and this is how low it's going to go for the day. And I've proved this in Forex, and I've proved it now in futures. You don't need to trade short the high of the day. You don't need to go long the low of the day. But you need to have an understanding of how and where those levels might form. And you only need to know one of those parameters in the beginning. So that means if you're bullish, what level do you need to worry about most? Not that worrying is a good word to use here, but what you should be consumed with in terms of pursuing the deeper understanding of what price is going to do. If you're bullish, if you think that monthly chart and that weekly chart is going to keep going up, and your daily chart just had a down close candle yesterday and hasn't changed anything structurally to indicate that it's going to keep going lower, it just went down into a discount array, into a daily fair value gap, into a daily order block that's bullish, then it's reasonable to anticipate the very next day what? The market's going to open, trade down initially. That's a Judas swing. And in that drop, I'm going to be buying that. If I miss it, if I miss the actual entry because I get to my charts late, something keeps me from seeing it at the chart, I'm talking to somebody, I just don't see it because I'm human. I miss it. I'm on the phone. Anything. I could be at the bathroom. There's a number of things that's going to prevent you being in every instance of a trade where you can expect it forming. Because I've had a lot of those instances as a younger man, that's why I work so hard at creating new buying and selling opportunities to get into a trade that's already underway. So that's why I got 81 ways to do it. So if you're bullish, you're expecting that initial manipulation. So you're only focusing on worrying about where the low is going to form. If you're bullish, you're only worried about how the daily low might form and where it might form at. You're not trying to predict the closing price because chances are your closing price might be lower than it actually is, and it could just keep going higher and higher and higher. So you go into an understanding of the daily candlestick forming by understanding what the monthly and the weekly and the daily charts are indicating. If you had a down close day yesterday, chances are, if everything's still bullish, you're probably going to have an up close day today. That means at 9:30, using the NQ, ES, and Dow futures as a medium to talk about this, at 9:30, what I'd like to see in that situation is an initial small little rally higher to get people in buying long. And then they drop it down into a discount. Some overnight low, relative equal lows, some overnight sell side liquidity pool, or maybe a fair value gap that's formed between, 2 o'clock in the morning to 9:30. And if it also overlaps with a new day opening gap, new week opening gap, or a first presented fair value gap from the previous day, chances are that's going to be the low of the day. But the key is if I'm bullish, I want to see two things happen. I want to see a small little minor rally first that trips in buy-side breakout artists. They're buying on a stop. And then they're going to look for the most recent swing low. That's where their stop loss is. Well, that's where it's going to do this to and through. So it's going to jump a little bit, look like it's going to go higher. The public will chase that, even if they don't have an order that's going to buy at a breakout on a 1 or 5 minute chart. And then it drops. And it stops them out, and it stops out anyone overnight that may have a long position on. That's the perfect scenario for a Judas swing on a classic buy day. Is that complicated? If you're brand new, this is the first time you're listening to me, it probably does sound complicated. But if you've been with me for a little while, that's an easy recipe. It's easy. If you don't have a confluence of those factors coming together, where at least 3 things are telling you something there, not just a PD array, there has to be something else there. Time, you're inside that opening range between 9:30 and 10 o'clock. You're seeing buy-side trip initially, and then they get ready to cross the close by the drop down, which makes the low of the day. That trades into an overnight, which means London session, 2 o'clock in the morning to 9:30 opening bell. Some low there. It doesn't have to go to the lowest low of London either. So at 9:30's opening price, you'll see a little fluctuation above it that takes buy side, and then you'll see this little tail that's dropping down. When you're zoomed in on these 1 minute charts, like you see every live streamer has their charts zoomed in real close, they're never seeing it form because they're too close to the trees to see the forest. So that's why you have to have one time frame that's zoomed out a little bit, like a 15-minute time frame. It gives you a perspective that you wouldn't otherwise have because you're zoomed in on these 1 minute charts. And every individual 1 minute candle, or less if you're looking at 15-second charts, you're lost. You have no idea what's coming on and then what's going on. But you focus on one side of the range. If you're bullish, you're looking for the low of the day to form. If you're bearish, you're looking for the high of the day to form. You are not trying to be perfect in timing. You can anticipate it forming in that first hour of trading. So from 9:30 to 10 o'clock, your high or low will form. Majority of the time, you'll see that form in the first 30 minutes. Sometimes in the first few minutes. But the higher low of the day for equities, or indices rather, is going to form in that first 60 minutes of trading. So 9:30 to 10:30, which is not any coincidence as to why I'm teaching my son to focus on his trading being done by 11 o'clock, because he's going to graduate to holding on to a trade past that point based on what he's done in the morning. And he'll trade the whole daily range. While everybody else out here nickel and diming it, scalping it here and scalping it there, he'll do that in the beginning of the day, maybe even pre-session once he gets good. And then he'll nail down the low of the day when he's bullish, and he'll hold based on time. That means he's going to stay on the trade until 10 minutes to 3 Eastern time, minimum, because that's the macro beginning of that last final hour. And then he'll babysit the position after that and trail his stop loss and protect whatever range open profit he has. And that's how you trade the daily range. That's power 3. So I just basically outlined how the market makers and how the algorithm will book that low of the day when it's bullish. They hide the narrative, which is the first thing that they do, by having all these little quirky little short-term fluctuations in price. And they run buy side first to get people caught in. And then when it starts dropping down, people that wanted to buy that day, they're scared to now buy. So they're hiding the narrative. But they're engineering liquidity. Because some people will say, okay, I was wrong. Let me now go short. Where are they going to put their short at? Wherever they can get in at, because they're going to chase. So where are they going to put their stop loss at? at the high of the day that's formed so far since 9:30. So what is that doing? They're engineering liquidity. They're engineering liquidity above the initial high of the day after 9:30 opening when it's a bullish day. Everything I'm saying here, just reverse everything when it's going lower. It's very simple logic. But they provide a false narrative. It looks like it's going to go down for the day. Oh, look, it went up. It broke resistance here. So it should have went higher. No. That's them hiding the narrative, and they're providing a false narrative that here's resistance broken but failed, and they drop it down. And usually it looks real quick and fast. That is inspiring what? Excitement. It's excitement. You walk into the casino, nobody's winning anything. All of a sudden, boom. They get everybody fever pitch. I'm going to get lucky now. Why? Because listen to that noise over there. Everybody's screaming, hollering, clapping because this guy just finally got the payout on the Jeopardy slot machine. He just made $10,000. Look at this. Woo! Yay! Man, I'm feeling lucky now. How the hell does that have any bearing on what you're going to do in the next machine you put money in? It has none. But they know it excites people. It gets them excited. So they're going to start doing what? Put more money in the machines. Bet more on the tables. So when they give you that Judas swing, when it's really technically on the monthly, weekly, and a daily chart, it's bullish. You should be hunting the low of the day. So you're expecting some little broken wing attempt to trick people going in right out the gate, going up. Never chase that. Never chase it. There will be instances where it does that, and it never creates a Judas swing. It just starts right from the opening bell and goes up. But it's a rarity. It's so rare, you should not even worry about it. And that's why I told you in this mentorship, sometimes when the market just starts trading higher, it'll run without me. I don't need that move. I'm going to let the move come to me. I'm not going to pursue it and chase it down. If I got to chase it, it's not in love with me. I want my setups to love me. It's going to run to me. It's going to want to come to where I am. It's going to chase me down. I'm waiting right here for you, love. And if you don't want to come to me, see ya. You back to the streets, bitch. You got to go. So, hiding the narrative, engineering liquidity, and then providing the false narrative. That's the Judas swing. Makes it feel like the market's going to go lower. It's not. It's just going down to go up. So you're focusing on a bullish scenario. You're hunting and stalking. Where is that low of day forming? It's going to form in that first 60 minutes. Don't take my word for it. Back test that now. Now you have one more piece of information that you can go through all your charts and see how much validity is there. How much truth is in that statement I just gave you? Then what it does is it delivers price to retail liquidity. That means once it makes its low, it's ran overnight stops. So if they're long, they're not going to be allowed to participate in the now profit leasing of the move higher that creates the daily range going up and closing higher on the day. So now that liquidity that would have been used to protect early longs over the London session, they get stopped out. So they're not allowed to be in that move either. That's what the algorithm does. That's what the market makers asked of the coders. It needs to do these types of things. Unseat the potentially profitable. Because if you unseat them, their orders to protect their position is an order entry mechanism to pair smart money with that entry price. So they're buying at a willing seller at a deep, deep discount. That's the basis of why sell side is a factor. That liquidity, yes, it's a form of protection for you and I and anybody that employs it to say, I don't want to lose more money if it goes beyond this level or price. But the market maker cannibalizes traders that use that logic when they want the range to go a specific direction, higher or lower. In the first 60 minutes, they're using that mechanism of the Judas to go down when it's bullish to absorb all the sell stops that it can, because it floods the market with what? Market orders to buy, which is easy to pair up with that sell side that's being flooded to be market orders that come in, sell at the market. Because every sell stop, when it's activated, becomes a market order to sell at market. Well, who's willing to buy that? Someone that believes the market's going to go up from that low, deep discount price. Who might that be? Smart money. The market maker has control and ownership of the algorithm. They have the rights to control and manipulate and manually intervene in price. Most of the time, it's pre-scripted AI delivery of price, the low and the highest form. And the script just runs. Now, you're thinking, this can't be true because I can see orders on the depth of market and the ladder and yada yada this and yada yada that. Okay. Why is that big block of 500 or 300 or 200 that just sits outside of the fair value gap that it trades down to perfectly to the tick? But it doesn't go down to that block of orders that level 2 is slashing. Why doesn't it go there? If it's buying and selling pressure, if it's selling pressure, why wouldn't the market just skip right down there to those orders? Oh, now you have a problem. You have an argument to wrestle with. Because I'm telling you, level 2 data, depth of market, all that bullshit, that's a red herring. It's to make you think you have x-ray vision, that you have some kind of superpower. You're now on the same level playing field as the market professionals. When I say that, I'm not talking about Goldman Sachs. I'm talking about smart money traders, the people that don't do courses, the people that are not on CNBC, the people you're never going to meet. They don't have name tags. They're not LinkedIn. They're not out there trying to promote that. They don't go around calling themselves a smart money trader. That's me dubbing what they are. Who are they? They are people that understand this algorithm. They understand what price is going to do before it does it. And they know how it cannibalizes retail traders. Not just retail traders like you think, like Tom, Dick, and Harry that's just recently started up trading. They cannibalize the Goldman Sachs boys. They cannibalize every institution out there has a role in that. It's not just any one, all of them do it. They all fall victim and they also participate. But there is a class of traders that are never identified. They're never identified. They're never drawn any attention to themselves. And they're constantly in these markets all day long, reaping and reaping and reaping. And you never hear anybody talk about them. I mean, I'm the first one to talk about them. And I get labeled a crackpot. But how the fuck is it that I can tell you to the tick how these markets are going to behave? How could I possibly know those things? How could that happen? Randomness? I learned these things from other books, is that what you're saying? Because find that shit in the books. It's not there. And again, if it was based on those things, somebody else could trade like me using that same stuff and just say, oh, it's just Elliott Wave. Oh, it's just pitchforks. Oh, it's Gann. Or it's Hurst cycles. Or it's whatever. Fill in the blank. I haven't even showed you anything yet. And I've already blown your socks off. People are already finding setups immediately using what I've taught so far in this 2024 mentorship. They're immediately finding setups and they're like, what the hell, dude, it's been like this the whole time? Yeah. For 30 years it's been like that. 30 years it's been like that. And I'm loving the fact that I can live vicariously through all of your moments when you see it happening and you're like, oh, I know exactly what this is about to do. And boom, you can do it. That's exciting to me. I get my rocks off with that because just because I can see it happening, making money is not exciting. That's not exciting. Seeing other people become passionate about their life, their future, that they're inspired by now this new talent and skill, that they know that they have something that can feed themselves and their family and they can pass it on to their children. And fuck college because they're institutional centers where you're indoctrinated to believe stupid shit. You need to be a free-thinking, independent thinker. And you can only do that if you can carve out your own paycheck and you can say how much you're worth. If you submit yourself to somebody else and say, I'm going to give you all my time this week. And I'm going to let you tell me when I have to be here and when I can go home. And how much you're willing to pay me, I'm going to accept that. Fuck that. That's not me. And if that's you, good luck with it. But that's not what I'm teaching. I'm teaching you how to escape that stuff. So once it delivers to retail liquidity, then it's going to start repricing higher. So the first mode of banking profit, these smart money entities, will run those buy stops that are formed after the little initial rally up. So now the new high a day within that first 30 minutes or hour, they'll run to that. And that deep discount they bought at, they'll offload some of that there. So you'll see prints on your level 2 data where, oh yeah, there's trades taking place. There's always going to be trades taking place like that because the smart money is in there doing those very things. Everybody's also seeing retail traders do what? Chase price. Oh, it's going up. Well, let me just go in there and buy it at the market. You only need one contract traded to print that price. So the algorithm is going to keep doing what? From the time it makes that low of day, it's just going to keep printing, offering higher prices, knowing full well that there's going to be a market order coming in at all times. Then it'll book that price. And if you're short, you're sitting there watching it. And you're, okay, I hope it starts going back down now. But the algorithm's saying, no, I'm not. But you're not paying attention to that because you don't believe there's an algorithm. And it just keeps booking higher prices, offering higher prices, higher prices. It moves into a buy program. There's no retracements. There's no gaps. There's no fair value gaps. It just keeps going higher. What do you do with that situation? In your situation, you're losing. You're going to hold on to a potentially open profit that is eroded. And as it keeps marching up to that initial high of the day, prior to the juice swing lower, then it'll really quick jumps up. Because it doesn't want to let the people that have their buy stops sitting there pull them. Because they want that liquidity there. And what does it do? It keeps them from pulling their orders there. And also that excitement, it looks like it's a breakout. Oh, look at that. Oh, it's a breakout. And now you'll see the price really start to take off because they don't want everybody being able to pile in on those deep discount prices because they want to get it quicker to the high of the day. So classic buy days, they don't spend a lot of time near the low. There's a whole lot of energy that takes off when it finishes its Judas swing. It goes, bang, takes off. So you have to be positioned at that initial high of the day prior to the Judas swing. Anywhere from that high down, being long, is ideal. And be comfortable knowing that you probably will never see that range from the initial high being taken out to the Judas swing low. You'll never see that range that creates that ever traded to the rest of the day. So you don't have to have your stop loss at the low of the day. You can go back 3 PD arrays in that range, put your stop loss there, and just let it go. Go do something else. Go do something stupid like play golf. Tear up your back. Go do something that's fun like go fishing. Go take a nap. Go take your spouse out or your significant other. Go have lunch. Don't even look at your charts. Just let it go. And then come back 10 minutes to 3 and see how much of the range you now have under your trade and how many times that you may have done something silly and small little short-term little moves and never had the whole daily range. If you start trading that way, anywhere between 4 to 6 days a month, those are those types of scenarios. They're not an everyday instance, but 4 to 6 days out of a month, there are very easy classic buy days. And obviously, the other thing is said on the opposite spectrum, where you'll have 4 to 6 down days that are classic sell days, where you can hold for the whole daily range. Everything else other than that is days that you're going to have to be a trader that buys and sells intraday. Or you stick with the underlying narrative that constitutes your reasons for being a buyer or seller for classic buy days, because the monthly and the weekly chart indicates to you that it's likely to keep moving higher. Well, then you want to stick to being a buyer. And if the monthly and the weekly expected to go lower, you want to stick to being a short seller. And that way you won't ever miss those classic buy days when it's bullish or classic sell days when you're bearish. But if you don't have that in your analysis, you need to start implementing that, because that's why you're missing the big moves. That's why you're not on side most of the time, because you're not spending a little bit of time. It doesn't take very much time at all, like minutes, just minutes, looking at the monthly and the weekly and the daily to determine what the weekly range might be like this week. What could it reach for? What could it reach for prior to that target? So there's going to be a graduated degree of your best scenario, your best case scenario. It could go up to this level. Or a reasonable level would be 250 to 350 handles higher than where we settled the previous week. So if you're bullish, what PD array is in that range? If you just worked with that, you're going to be light years ahead of everybody else. And vice versa if you're bearish. So when that Judas swing occurs, what your mindset should be is, okay, if there is an algorithm, and if there is an entity out there that is collectively interested in trading with what it does and how it books price, how it makes price behave a certain way, because I've already said this many times before, if we had control with the sheer volume that as all of us traders come together, we could manipulate the price much, much more than what we see. And it doesn't happen. And they give you things like the circuit breaker rule. Oh, well, it seems like, it makes it sound like, oh, yeah. we have to stop the randomness of all you buying and selling. That's not what that is. That's not what's going on. But it sounds good, doesn't it? It sounds like they're controlling the wild stallions. We got to keep you guys from crashing the market. We got to keep you guys from sending it to the moon. It's not fair. Why wouldn't they want it to go to the moon? Think about that. How's that for an argument? Why would they ever want to slow down the market? Okay? Come on. The moon's not always up. Sometimes the moon's under. So, I'm having so much fun. But once the smart money traders buy near the low or at the low, they submit to time. They know that the algorithm is going to do what the algorithm does, which is now keep offering higher prices. And it matters not how many people come in and sell short. It's just going to keep offering higher prices. And as it goes throughout the day, you'll have small little intermediate term retracements, which is during the lunch hour. And what you'll look for on a classic buy day is the initial high of the day that drops right down from there to make the Judas swing low, which is the low of the daily candlestick forming. Any short-term high that's above that initial high of the day that buy side was engineered at right before the Judas swing lower. There's going to be a higher swing low. The lunch hour will many times drop down to that, and it'll clear the stops anyone that's trailed it there, and it won't return to the high of the Judas swing. But classic support resistance traders will think it's going to go there. It won't. And usually in between that initial high and the low that forms in a lunch hour retracement, there'll be some kind of a fair value gap that stays open, and that's a breakaway. That's a breakaway gap. So I'm fleshing out the entire daily range for you. And don't take my word for it. Go back and look at classic 5 days, and you'll see these things are there. And that can only be there because it's driven by an algorithm. That means it's running a script. It does these things. It's been coded. And it's astonishing. It's astonishing when you anticipate and you see it happening. And it's a weird feeling. It makes you feel like, I shouldn't know this. Like I should not know this. Like it feels like a dreamlike state. It feels like you're in a dream because what you're seeing happen, you anticipated it. And then you're seeing it. And then when you get good at anticipating it, then you can execute on it. And then what do you do with that? The whole field of dreams is in front of you then. You'll still have losing trades. You'll still get stopped out on days you think it's a classic buy day or a classic sell day, but that's okay. If you stick with this logic, it'll serve you well in your pursuit. Market making is not dealing. I have dealers in my mentorship. I have students that were quote-unquote market makers for a options desk at so-and-so brokerage, large institute. I'm not going to say their names, but you would know them unequivocally. You would know. Like these are big name industries, and they're large institutions. And since learning from me, a lot of them have come forward and they're like, listen, in confidence, I'm telling you this, so please don't say who I am or whatever, but this is the facts, okay? These same individuals have admitted that while they were being a dealer and their title was called market maker, they were a market maker at the, I have to be careful because if I say it, I've broke my promise to them. But let's just say at a specific options desk, okay, they are the market maker for that options desk for that trading firm. And they admitted that they had no idea what price was going to do, but they were offering the mechanism of putting buyers and sellers together at that institute or that firm. That's not market making. You're dealing. You're dealing in a price feed that you don't control, period. And that's not what I say or mean when I say a market maker. The price, and let's go back to a currency, okay? Because it makes it a whole lot easier to explain. Euro dollar. Okay, so the euro, when you're buying and selling euro, when the move's going up, that move up was not instigated or propelled by buyers. The transition from a old price level to now current market price that may be higher, the only thing that that chart is indicating and recording is transactions that occurred while that price moved from one price to another. It doesn't even matter how many people would have bought Eurodollar. If it was going to go there because it's ran on an algorithm, it's going there. It doesn't matter how many lots were purchased because it's going to keep going up. And it knows that there's going to be buyers and sellers that come in at any given time because of just impulsiveness. And we're seeing that transaction. But what you've been told and been lied to about is that's what caused the market to go up there. Look at a commodity market. Okay? Look at a commodity market, and when you look at the volume of that market and look at the price runs that occur there, you'll see price runs that have X amount of contracts that cause a rally up. And then it retraces down. And then there's another rally that happens later on. It's faster. It gets to a higher high faster, but it does it on very, very, very low volume. Why wouldn't it have at least the same amount of volume that the first leg did, if not more, because it moves faster? Because it's being offered by an algorithm. It's electronic trading. The pits don't exist like they used to. Before electronic trading, the pits would see the price feed. What are they looking at? That board up there on the wall. That's their price. The price is not in their fucking hands. They're not controlling price. They're looking up right now. What's the price right now? And they're saying, okay, I will buy this. I will sell this. Where did that price come from? The market maker. They're in control. It used to be about 7 to 10 gentlemen that used to sit around. And they would book price. They would control price. That's the way it was. And that price would be given to the floor. And the floor does their transactions, and you have the all-floor people like you and I, speculators, John Q. Public. We would buy or sell based on our patterns or whatnot. And the only thing that's recording is our interest at that time. But the movement between one price point to the next is already predetermined. The highest high and the lowest low of the day is already predetermined. All you have to do is study volume, and you'll see that there's price runs that have very, very low volume, but they move larger. Why is that happening? Because the people that control price are constantly offering higher prices. If Michael Jordan, back in when he was really popular, if he would introduce a new shoe through Nike, everybody would go crazy simply because they want to have that shoe. He was the Judas. How to separate fools from their money. Well, here you go, Michael Jordan. Let me buy something for $100+ that doesn't last that long, and it's pretty much garbage. But people were shooting people and stabbing people and stealing them off other people. They wanted them so bad because they didn't have the money to afford them. Everybody has their own form of Jordans in trading, their own little logic, the thing that makes them feel like they're a basketball player like Jordan. I'm a real good trader because I use GAN. I'm a real good trader because I use Elliott Wave. I'm a good trader because I do this and I do that. Okay, good for you. But you wearing those Jordans ain't making you a basketball player. You using these logics that you think are the reasons for the market going up and down. These indicators, these overbought, oversold indicators, that's not making the market go up. How many times have you seen an oversold indication that was bullish divergence too, and the market just kept going lower? Just kept going lower. Just kept on going lower. That was the wake-up call for me because I was a perpetual bull when I first started. I only could want to be a buyer because it made sense to buy low, sell high. I could not grasp the idea of selling something I don't own and making money when it goes cheaper. It was an alien concept to me. I couldn't trust that. And I just focused on being a buyer. And there was many times where I was trying to be a buyer as a 20-year-old, not knowing what the hell I was doing. And everything technically, based on every retail thing you can imagine, said that it was going to go up from there. And there'd be this little tiny little move up. And I'd be, yeah, I'm on side now. And the only thing it did was take out a short-term little high, the run trailed buy stops, and then the fucking floor would fall out. And I'm in drawdown because I don't have a stop loss. I'm still just in drawdown. And I'm thinking, okay, well, it just needed to do that little bit of move. Now it's going to go up. And the whole time I'm watching it go lower and lower and lower. And I'm like, finally, I got to pick my guts up. There it is. Let me at least have $200 left in the account. Let me just have that. And if I would have held on to that, it would have took that and more. So that was my wake-up call that there's something else going on here. Like I gotta look deeper into what's going on behind price. And the algorithm is designed and coded in a way where it will capitalize on two primary things. Where there are pending orders, and it does not know how many orders are above or below the marketplace. It doesn't know that. It cannot worry about that because that's always a dynamic fluctuating value. Just like look at level 2 data. You'll see the orders there. There'll be a big block. There'll be a 500 block, a 300 block sitting at a price level. And then as we get closer and closer and closer, that order won't be there anymore. It'll be less. Why? They lose interest. They lose the interest as it's getting closer to it. Why is that occurring? Because that's spoofing. But see, you're looking at it differently. You're looking at it through the lens of retail. Like, it's going to go there because there's a big number there. That's bullshit. That's how you get tricked. That's how you fall victim to that nonsense. These things that are trying to point to where orders are, all you have to do is look at a 1 minute, a 5 minute, a 15-minute time frame, and you'll see every liquidity pool that these little bubbles or these little things are showing you. You don't need to know a number. The number is that's the red herring. That's the Judas swing gimmick of that thing, that process of visualizing how many orders are there. Those orders are not all literal. They're not actually going to be there when price trades to it. They'll pull them. But they're using, big, large institutions can place orders there to influence other traders to book price for that express purposes of tricking them, knowing full well that every transaction that takes place leading up to that level that never gets hit, other traders are going to look at the chart and say, oh, this is one of those fanny pack patterns. And the last time I traded it, I got more money for my fanny pack. Come on, man. Like, if you give it enough time, you can come up with a gimmick or an excuse to get into anything. But you have to strip it down to the very bare essentials. The markets go up for buy stops. They go up to reprice and or rebalance and inefficiency. That's it. It goes down for sell stops. Or it goes down to reprice to or rebalance an inefficiency below market price. That is it. If your patterns that you trade off of happen to agree and overlap in that instance, that's why your shit worked. It wasn't because of your harmonic pattern. It wasn't because of Elliott Wave. It wasn't because of anything except for that's what it was going to do at that time. If you go through all of your losing trades, I promise you it will be a revelation. But most of you don't even give a shit. You haven't journaled anything, so you don't have the ability to go back and study what you did wrong. But the ones that have, go back and look at where your losing trades occurred. And then look at what I teach, and you're going to see mine standing in front of your trade. What I tell you the market's going to do and how it's going to behave in book, that's why your trade failed. And vice versa. Look at all your retail shit and the times that it works It's because you're in agreement with what I'm teaching. And I know damn well that's narcissistic, isn't it? That's arrogant as shit. You're damn right. Because it's the truth. That is the truth. And when you stop paying attention to all these gimmicks and you stop being this team mentality, VWAP team, volume profile team, BSA, supply and demand, they're all bullshit. None of that stuff makes price go up and down. Zero. You're not going to tell me the tick of the entry to get in at, which is the highest of the candlestick. You're not going to get out the lows. You're not going to trade like me. You're not going to get like that. You ain't going to get it like that. Not in any of that other Mickey Mouse shit. You're not going to. Because if any of you could have done it, you'd be doing it already. Why am I still out here barking and then nobody's coming forward and saying, here's the shit that beats your stuff? Shut the fuck up, Michael. It's still not happening. That's what's entertaining. Like you would think, seriously, you would think. Come on. I want to fucking see it, but it ain't there. But they'll come in and they'll make little remarks to try to discourage you. Because they know they can't beat it. And they can't stand it in their own skin. Seeing that they can't beat it. They can't make an excuse for how I'm able to do it. So the easiest thing is, oh, you're a fraud. Oh, you're this and that. But how do you claim that? When I have transferred the information to students that now are using it too. And now, you said I would never live stream and trade. I'm doing it in front of you. With precision elements that you can't copy in anything else. So, market making is the mechanism that these algorithms book price under. There is no market maker person that's dealing between two price points that makes price. No. Absolutely not. That is a dealer. But they have been miscalled as a market maker. They are not controlling price. They are not going to deliver the high and the low of the day before it happens. They're not going to give you the logic. And every single one of the people that used to be called market makers in the financial world that are now students of mine, they all collectively said the same thing. They had no idea what the fuck price was doing. They just were dealing at the price at that given time. So they were providing a pairing of orders coming together, and there it is. That's not market making. You're dealing. You're dealing in a price feed that everybody else is dealing with. You're not creating that feed. You're not changing it when it's going to keep going up to a buy-side liquidity. You're not changing its direction when it's going to go down to a sell-side delivery. You're not doing anything except for doing a transaction like anybody else is at that given time when we place a trade. So when you hear this stuff and you think, oh, well, the market maker does this. Well, the market maker's role is to be delta neutral. Yeah, dealer is. That's the dealer's job. That's not a market maker. A market maker is delivering the whole fucking range, the high and the low. And they are not going to let it go outside of that high and low unless it benefits them. And that's manual intervention. That's FOMC, it's non-farm payroll, it's CPI, it's PPI. When they go in and they know they want to disrupt as much as they can, because they're doing one of two things. They're breaking the initial sentiment going into that market release, some kind of news driver. The news itself is not causing that. That is the catalyst to blame when it's the market makers themselves that actually have their hand in the pot. They're stirring it up. That's what's going on. But when you keep hearing people talk about this stuff on TV, in books, in courses, and they repeat the same bullshit, it's the same bullshit. If you never look at it like I'm teaching you, you'll never see it. But once you start studying it this way, you'll see everything else is absolute grade A bullshit. There's no fucking reason how I could know this stuff in advance unless there was something that I knew that you don't know. Nobody gets this fucking lucky. Nobody gets this fucking close to perfect. Nobody can know the future like I'm fucking proving. In live stream, in advanced commentary, one-sided commentary, very specific price levels. It's going to go to this liquidity next. Boom. Set your fucking watch. It's going to happen. Come on. And you guys are still, some of you sitting out on the sidelines, holding on to your bullshit little mechanisms. Your little gimmicks. Because you don't want to switch to Team ICT. Fuck Team ICT. There's no Team ICT. You're not on my fucking team. I'm a one-man fucking army. All of you just want to learn what I do. And that's all I'm asking you to do is investigate it, look at it, test it. If you don't like it, you can't do it, then Do what you're doing now or go do something else. But really put an effort into seeing it, testing it. The things I tell you, look for it. And once you start seeing it, you're going to be like, man, my stuff's saying this is a buy right now, but this guy said if this is going into the marketplace, it's probably going to go the other way. And now you're in a conundrum, aren't you? Do you stick with your program that maybe is 50% right? And now you have the wrestling match between what I taught and you have an awareness of. If you take that next trade and you lose, you're a convert. I've convinced you at that moment. But the weak-minded ones will still want to wrestle, and then you'll troll me. That's what every one of my trolls that turned student, that was the same thing they did all the time. When they started implementing what it is I teach, and they were still trying to trade their shit, and when mine was saying it was going to do something that was opposed to them, they took the trade. And when they lost, they hated me more. They fucking hated me more. They're like, man, this motherfucker, and they would troll me harder until they kept seeing that when I was teaching the concepts that caused the market to go up really, and their pattern bullshit, their Elliott wave bullshit, their whatever the hell Mickey Mouse shit is, was failing up against it, they finally broke down and sent me emails. Said, listen, I gotta be honest with you, man. This is, I didn't want to believe it in the beginning, but man, what the fuck, right? And now they're really good students. They don't blow smoke up my ass. They don't cheerlead me in public. They don't lift me up and glaze me all up on social media. I don't want none of you doing that. That's not what this is about. This is about teaching you what really goes on, how to anticipate it in price action, and remove all of the confusion about what it is you're looking for and when it's going to occur. Like how else could you improve upon this? Not that I'm not going to, because I am, but if you can time when you're going to do something, you know inside of a 20-minute interval when you're going to do something, and then you have a higher time frame directional bias that tells you it's most likely going to book here. Why? Because smart money holds positions longer than just a couple seconds or a couple minutes. But there are high-frequency trading algorithms that fire in and out all day long that capitalize on that. It's not just institutions and retail traders. There is an entity that is always in the marketplace, always buying and selling all day long, up, down, up, down, up, down. In every consolidation, they're buying and selling in that too. There's always volume coming through the marketplace, always. And just like you hear these things called dark pools, well, there is an entity of smart money trading that they are not on the exchanges like you think they are. And it's something I can't point to it, and I can't talk more about it than what I just said there. Just know that this isn't the only circus in town. Let's just say it that way, okay? And they have a vested interest in controlling the outcome. And that's pretty much all I'm going to say about it. But you can see these things happening every single day. If you're looking for it, you'll see it. If you've never been introduced to it, you'll never imagine that it's like this. You'll think it's just random price action. Oh, well, my system didn't work today, so I'm glad I got a good stop management and didn't over leverage. Because, price is random. That's how they tell themselves. They tell them that because it consoles their doubts about what their next trade's going to be like. And the ones that are really good at money management, they don't care what the outcome of the next trade is because they know as long as they're managing their money correctly, they could be 30% wrong. 30% right and 70% wrong in what they do and still be profitable. Much like a poker player. If you watch these professional poker players, count how many times, keep a running tab, get a little notepad. This is the things I used to do. I would write down their names, and then every time they had a winning hand, I'd put a check mark next to them until that table was finished, and they went to the next table. How many losing hands did they have versus their winning hands? And it's surprising. They only had very few winning hands, but they lost. Most hands are folded majority of the time. Study it and see. So what are they doing? They're managing their money. They don't have control over the cards. They don't have control of the other people's decision making. They have control over their money. When you're trading, you could flip a coin. If it's heads, you're going to buy. If tails, you're going to sell short. If it's a Monday, you're going to only buy the morning session. If it's a Tuesday, you're only going to buy the afternoon session. And you put these filters in. And you never risk more than 0.5%. At the end of the year, you can be profitable. Figure that out. Figure that out. You're holding for the daily range, by the way. That's the other part of it. It's the same mechanism that's being seen in poker. It's the same mechanism that's done in anything, that if you give yourself enough time for the circumstance to pan out, whereas in this case, the daily range, creating the higher high and close on the high when you're bullish, or lower low and close on the low when you're bearish, if you put yourself in those days appropriately and just hold on to it, don't jam your stop loss up, try to strangle the trade, you are in a position to capture the lion's portion of the day. And you'll capitalize what that algorithm is going to do for that daily candlestick when it books the low and the high of the day. I'm telling you the times that it's going to create those instances. The low of the day is in the first 60 minutes for stock indices. The high is formed going into 2:50 to 4 p.m. all Eastern time, okay? New York local time. So if you're bullish, you can try to nail down the low, and you'll probably lose trying to do that because you're going to try to capture the very low. And over time, you'll realize that, okay, what happens? Just wait for it to actually be there, and then trade it on the next discount array. What you'll be doing is you're going to be buying the low risk entry of the market maker reply model. Yeah, so let smart money have that smart money reversal. I'll be down there. But when you see that next fair value gap or institutional order flow entry drill or inversion fair value gap to trade off of, or order block, bullish one, that could be your entry mechanism for the low risk entry. And you ride it all the way back up to the initial high of the day, and then you anticipate an explosion where price goes up higher because they're going to want to leave that Judas swing area as fast as they can. And it's a lot of ground will be made there. And people will chase it all in that big buy sign and balance, sell sign efficiency that'll form then. And that's where the lunch macro will retrace back down inside that and stop those individuals out, and they'll accumulate more longs that they'll ride through the PM session of the day, and they'll get out at the high of the day forming between 2:50 and 4 p.m. Eastern time. Folks, that is your real candle range theory. That's the real power of three. That's the real ICT. Okay? That's the algorithm. That's what the algorithm fucking does. That's what it's coded to do. Anything other than that, it's manually intervened. It's as simple as that. It's 4 to 6 times a month, both buy and sell. Don't take my word for it. Go through the fucking charts, and you'll see it. So, the reason why you lose, I'm going to say this in closing. The reason why you lose is because you're not aware of these things happening. You have no awareness that there is an algorithm that delivers price. You have no awareness that the market is going to do something that's predetermined and it's scripted. And you get tricked by speedy little price runs that take off, and it's exactly why they do it. They're engineered, they're scheduled, they're scripted to see you get enticed to chase something or change your mind about something you might be right about. That's why when you're bullish sometimes and the market has rallied up and it creates a buy sign and balance, sell sign efficiency, and then you see it drop down real fast and it gets real close to where you entered at. Because you don't know what the algorithm's doing, you get scared and you close it out thinking, I don't want to lose on the trade. I should have got out at the high before it retraced, but I got to get out of this because I think I'm wrong. It's going to stop me out. It's going to be one of those instances where it sees my stop and it's going to get me. And you contrast that with what I show you in my transactions. I'm recording it. I have a stop loss, and I am nowhere near afraid of where it's going to go. And it'll get real close to my stop, and I don't give a fuck. Sometimes I'm adding to my position right then and there. Think about that. Think about that. What's different about that? I know something that you don't know. And what I know, I'm teaching you. I don't put a price tag on it. I'm not selling it to you. I'm not enticing you to buy books because I'm telling you don't buy them. What's going to happen is this. I'm going to publish the book. People in third world nations are going to take the book and they're going to scan it into a PDF file. And in 3 days, it's going to be all over the internet. I'm not selling books to make money. I'm putting books in print just because I want the ISBN number associated to me. When I release all the information about the things I want to teach, everybody will go to that book, whether they get it from a pirated version off a fucking Telegram in a PDF format. I don't give a fuck about it. I'm not trying to make money on books. Nobody makes money by buying books, or selling books, rather. The margin's too low And it's not, if I want to make money, I'll just simply fucking make money. Okay, I can go out there and press the button and make more money. If I want to have easy, fast money with no effort at all, I just put a mentorship out there. I'm not doing that either. So what am I doing? I'm teaching you because I like teaching. You think I can't make millions of dollars just putting another PayPal link up there? I can do that. At any minute, I can do that. I don't want to do that. That means I'm obligated to another group of people that think that they own me because they paid for some time. You don't own me. I like teaching. I like transforming individuals and giving them the empowerment to transform their entire future legacy and their family tree. And you can do these things. They can't hide it from you, folks. They can't. I'm trying to explain this to you. They cannot hide it from you. But if you don't understand it, you can be tricked by the things that you don't know. You get trapped in price. I don't fucking get trapped. There's no smart money traps. Smart money does the trapping. You're not trapping smart money traders. You don't even know what the fuck a smart money trader is. That's what you get when you get people teaching leaked content, lying and defrauding people. They make up bullshit like CRT. All this secondhand mentorship, watered down, has all come from me, and they don't even know how to do it right. That's why the 2024 mentorship is being live streamed. That way nobody can talk shit and say, he picked the right one, he's cherry picking. You notice they ain't saying any of that anymore? They got nothing to say now. And they're going to find something always to gripe about. Instead of saying, I'm going to take this energy, like some of the troubles I've had in the past, and I'm going to dive into this. I'm going to prove him wrong. Use that energy. Go into it with that intent that you're going to prove what I'm teaching is wrong. Let that be your fucking superpower. You're going to go in, that's it, baby. And watch what happens. Just watch. And you're going to see it's an uncomfortable feeling when it hits you. The whole time I've been telling the truth. The whole time. And all that time you wasted. You're wasting it. Why? It costs you nothing, man. It just goes to show you. I said it in Mentorship 2022. I'm sorry, not 2016. 2016, rather. I said I could literally teach this stuff on the front page of the USA Today newspaper. And it would largely go ignored. Because people we're weird creatures. We want something easy, and we want to say something that we did. Like, we did it. I figured it out. I did this. I did that. And a lot of my students that are male are out there actively trying to distance themselves because they want to look like they created something. And the only thing they did was create a new name. It's my stuff. I get accused, like the Democrats tell the world that the other side does this and does that, and they're guilty of it. They're doing the very things they're accusing their opposition of doing. I didn't rebrand shit. I'm the originator of all this stuff. I'm out here demonstrating it, and there's nobody else out here doing it either. They're not demonstrating it. They're not teaching the new content and showing you how it's going to work, and then it does. These are all mine. These are all my things. And a lot of my students that are male want to be like that, and they want to emulate me by trying to say they created something new. Or they'll send me tweets and I figured out something that you don't know. Listen, you don't even know the fuck I know. So stop that stuff. Okay? I don't even want to know what you think you know. I don't need to know anything more. I know the market. I know the fucking source code. You're talking to me about what I don't know. Get the fuck out of here. It's silly. Like, seriously. You don't even know who the fuck's talking to you. That's just nuts. Oh, it's fucking fun. But market making used to be a group of men that would get together and they would control. And how would they do that? For the ones that were asking, how did they do that? If it was before it was electronic and it wasn't out there, how were they doing it? They would put orders in the marketplace. One group of the men across the table, they would have an interest in buying, and the other one would have an interest in selling, knowing that the market would book that price, mark to market, and then it would reflect in the price action. So if they wanted the higher high of the day to be met, they would have an order to buy an X amount of whatever it is, shares, contracts, whatnot, and they would cause that transaction to happen. And they would just keep doing that. And they would offer constantly higher prices, and if they weren't getting the order flow that would come by natural process of buying by the floor or other institutions or the public that would be investing in that, they would create that mark-to-market booking of price that keeps going higher. So they would artificially create these buy programs and sell programs, but it's not efficient. I mean, whenever you have a human element involved, it's not efficient. So sometimes it would not be as efficient as they would want it to be. And then you have the age of electronic trading, which I was privileged to be a part of, where I was doing the hand drawing charts, where I actually had to draw my charts out. I would put the little opening price tick on the chart, a paper chart book, and then draw it down to the low and up to the high, and then I would do a little right tick to the right for my open, high, low, close, and that would be what I would do. I had to do that 4 times a week because the orders that I have for new books of charts that would be delivered weekly, they would give you how the week settled, so it would give you Friday's trading. They would print and then deliver it to you, and then on Monday, you would start doing, the whole drawing of your charts. And I would never have to do my Friday because the next chart book that would be delivered to me by mail would be showing Friday's open, high, lows, close for the markets I would trade with. And the markets I was trading back then were the meats, currency futures, bond futures. And it's a little tedious when you have to draw your own individual open, high, low, close bar. We didn't have any alternative back then. I mean, that's just the way you did it. And then they created software programs like Supercharts, TradeStation, Metastock, that was my favorite. I liked Metastock. I think it was Equus was the producer of it, but I love that platform. That was my favorite platform, and I used end of day data, and I would plot hourly charts with the daily chart and the weekly chart, and I would just simply use a 50-day moving average, and if it was sloping up, I was bullish, and if it wasn't sloping up, I wouldn't trade it. I would wait for another market to trade that would give that indication. And I would use a 60-minute or hourly chart when it would go oversold, and it would either give me a type 2 trend following divergence, which is called a hidden divergence today. Nick Van Nice was the guy that introduced that. Or a classic type 1 bullish divergence where you have a lower low in price, but a higher low in the stochastic. That was my model back in the 90s. So whenever I made money, if the market was going to go up, that's when my system worked. But it didn't work a lot. It lost a lot because the markets were not always going up. And I didn't know how to time the market going up. I just looked at the indicators to tell me when it should go up. And I got my ass handed to me over and over and over again, trusting indicators and never referring to price, never referring to it. The only time I cared about the price is what price I needed to say to my broker when I had to physically call them to tell them what I wanted to buy at, because that was it. And the only selling I did initially was if I use a stop loss at all, this is where I want to put my sell stop. Sell was a rare thing in the 90s for me when I first started because I didn't know much and I was already trying to do something I wasn't equipped to do, trying to trade with money that I couldn't afford to lose. I was borrowing it off of credit cards of all places. That's how rushed I was. So when I am critical on all of you and I yell at you basically and telling you you're stupid for doing this dumb shit, I'm the leader of that line, man. Like, if that's a Congo line, I was leading it because I was borrowing credit card money. That's dumb. And it's bad. That's a bad decision. But that's how panicked I was to get out of the situation I was in. I was willing to take a cash advance off of a credit card. Nations Bank credit card. That's what it was. And I blew it. Because I was trying to do the things that many of you are trying to do, and you think you're going to be the exempt. It's not going to happen to you. Versus saying, okay, Michael says to look at the market like this. I'm going to spend the next weeks and months looking at it like this until I get comfortable with seeing and recognizing it. Then when I get comfortable seeing it and recognizing it, then I'm going to start demonstrating setups that I've been tape reading. And then after I do that for a minimum of 2 months, minimum. If you can't give yourself and me as a mentor 2 months of paper trading, that way you're proving that you're consistently trying to use the same stuff. You're going to lose. You're going to have losing trades. There's nothing wrong with that. But you should be using the lowest leverage. That means using 1 micro lot if you're trading index futures. Let that be your benchmark. And if you're consistently able to trade with that for 2 months, then at the very, very, very minimum, I think you could entertain, not that you should, but you could entertain the idea of going after a combine challenge because you're only risking what you paid in. But you should not trade with real money yet. And if you can't get a combine passed and grow that account to fund it with one micro, you're not trying to rush to get a lot of money. You're going to be surprised how it feels when you have this monetary reward or punishment if you do it wrong. That's why you want to get bored with doing it correctly in the beginning. That's all part of the documentation stage of your development. This is all the things that you're going to have as a baseline and foundation. This is what you worked with to start from. And if you don't record all that, you won't be able to measure your advancement in your understanding and your progress. And you will feel so much better a year later, 12 months from the time you start, and 12 months later, and you look back at what you journaled and how you thought about price and the silly little times that you were worrying about things that were not even all that impactful, and all the energy and the time that you wasted worrying about the things that are not even important, that could have been used to focus on the positive stuff. And how you think about price back then versus how you think about it 12 months later, you're a new person. You'll be confident. You'll be detail-oriented. You won't be in a rush to get into a trade, and you'll feel comfortable. If you want to take a day off to do something and not trade, you're not missing anything. That's the wonderful feeling. Like, I don't ever feel like, oh, I missed the move, man. I wish I would have. No, you don't ever hear me talk like that. You never hear me talk that way because I know what I can do every single day, and I know when the big days are coming. I know when the big runs are going to occur, higher and lower. I know all those things. So because I know them, I know they're not an everyday instance, whereas you don't know when they're going to occur, so you naturally assume what? Every day could potentially be one of those big days. Think about it. It's true, isn't it? That's exactly how you think right now about price. You never know when that big day is going to come. I do. And if you don't get control of yourself and start giving yourself realistic expectations and living in those and not trying to be an Olympic feat type trader where you're trying to do the impossible all the time. Some of you young men are trying to impress me with what you think you figured out instead of just showing me what you've learned and learned it correctly. That's what would impress me. I think what you're trying to do is you're trying to distract and lie to me and lie to yourself and anybody else reading your tweets that you are doing far better than you actually really are. And I mean that with love. I'm not trying to be, derogatory or try to talk you down. I'm telling you, there's only a few of you that do it, but I'm quite certain you're doing that because you're compensating for something. So instead of telling me what you think you discovered, show me what you've been doing with what you learned. And if you're not consistently able to do that, I'm not impressed with anything else. Because that means you haven't done the work. That means you haven't been putting yourself in front of the charts, tape reading, studying, back testing, and then never making it to the point where you could be demo trading with a purpose, not just guessing. Like you should, if you're going to employ a demo account, you should be at least comfortable with knowing that you're not rushing to get into something just to prove something. It's going to be, I'm doing this because I see the setup, I see where the risk is, I see where the profit is. The range is affording me enough to warrant the risk, and it's at the time of day when it should behave this way. So I'm going to engage it and trade it based on those rules, and then take it down, and then journal it all up, mark it up, and document it. And put it in your journal. Next day. And you keep doing it. Minimum. If you can't give me 2 months like that, stop listening to me. Stop watching my videos. Go listen to somebody else. Go listen to someone else tickle your ears and give you all the little buttery little comments and never learn anything. And then come back when you lose your ass because you'll be better equipped to do it the right way. Because if you can't do this, I promise you this, you are not going to get what you think you should get real quick. You want it real fast. It ain't going to happen real fast. And the faster you want it, the longer it's going to take. So just submit to the right now day of this is what I have to do. I have to study price like this. I believe that there's an algorithm. I believe that it's going to behave this way based on time. And now I'm going to go in looking for that. If it isn't occurring like that, if I don't see it happening, then I can quickly ascertain that this guy's talking out his ass. There is an algorithm, so therefore he's a fraud, and I shouldn't waste any more time with him. There you go. That's the litmus test. It costs you no money to get that. And don't take anybody else's opinion for it. Don't take anybody else's tweet. Don't take anybody else's bullshit lies, any kind of video garbage. You do it. You do it yourself, and you will see what I've said is the truth. Nobody has gone through that process and came forward and said, this is fake, this is false, it doesn't happen this way. I've never done it. It's never done it like that. And that's why I always encourage every single person that comes to me to don't take my word for it. Don't believe what I say. Go into the charts and see what I'm telling you is there or not. I'm convinced that once you see it, you may not like me. You may not come out on social media and say, hey, look, you were right, or I was wrong, or anything like that. But you're going to start digging into it more. And it's going to make you a better trader. And it's going to help you not lose so much money. If that's all I get out of this interaction between us, that's a win for me. Because I don't want to see you guys hurt yourself. And I hurt myself a lot. And it messes you all up mentally. It makes you it's hard to live with some of the mistakes you can do to yourself financially and emotionally and psychologically. I would be so much better as a trader and as a person if I would have had someone like I'm trying to be for you. If I had that, I'm convinced that I wouldn't have hurt myself as bad as I did. I would have learned better. I would have learned faster. Not that that's a good thing, but I would have known what to do sooner without going through all the trial and error of hurting myself, of trying to talk myself into bad things and convincing myself of it being the right stuff when it was all the wrong stuff. So you have a market that is absolutely controlled. It should not bother you. It should be encouragement. Because if they're controlling it, that means these things that you're looking for are going to constantly repeat. And if they can constantly repeat, that means you have a reoccurring condition that affords you a setup that can be framed with risk and potential profit. That should encourage you. Use your thought process right now. If you have something that you've been trading with before coming to me, can you tell me if it's going to be the morning session or the afternoon session that your trade's going to form in with your school of thought, and what time it's going to form? Because if you don't know that, you're not on the same playing field. You're not even in the same zip code as me. If you can't tell me if you know where the market's going to go, higher or lower, more than 300 handles, up or down, you're not on the same playing field as me. If you don't know how to add to a winning position at every point that would be an individual entry point as well, if none of the previous ones were used and they'd still be profitable, you're not on the same playing field as me. If you don't know how to see where the high or the low of the day is going to form before the day starts trading, you're not on the same playing field as me. All of you have opportunities to improve on. Some of you have a whole lot more opportunity because you have next to nothing in terms of understanding. Others, you have these things that you've held on to, and because you probably have made a little bit of money in the past, you think, and you've married the vein, thinking that this is the panacea, be all end all, and it beats everything else because you've made a little bit of money with it. But you're not so confident with it that you're going to go out there and say, let's see what mine does against yours. And I've only done that not to be a dick, not to be a troublemaker. Well, maybe I did do that to be a troublemaker. It's not meant to be vicious. It's to open the eyes of everyone else because teams exist in trading. Tribes exist in trading. And some of you like to make it ICT tribe, or team ICT. Each one of you is a one-man army. I don't need any of you to defend me. I don't want you doing that. And I have created these scenarios where people can step forward and present what they believe is good in the marketplace versus what I'm telling you and proving. And nothing's going to come close. The reason why that doesn't happen is largely because they don't know how to trade well. So they don't want to showcase that. Two, when I do outshine that and prove that this is a superior perspective on the market, it's going to mar them for life. It's going to hurt them, and they're trying to spare themselves of that. Just like in the beginning when you do all the wrong things, when you're watching price and impulsively say, oh, it's going to go up from here, and it doesn't, and you just quickly discount it. It's the same thing. They're putting blinders on. And that's unfortunate because you're holding yourself back. All of you, even if you are making money, you could be making so much more money easier by knowing what's going to hurt you. How is this market going to violate the people that don't know these things? That's the benefit of learning from me. It doesn't matter if you use my concepts entirely, but if you understand how the market books price, if you can recognize what I'm suggesting when the market should go higher or lower, and your stuff agrees at the same time, you can trust your system then. I mean that wholeheartedly. I'm not trying to be funny. I'm not trying to be rude. I'm not trying to be narcissistic or arrogant. I mean that wholeheartedly. If you can learn enough about what I'm teaching about price, if you can see both agreeing at the same time, in my opinion, you can trust your stuff then, because that's when your retail stuff's going to work. When it's in alignment with, and it's going to be few instances of that happening, but when it does happen, your stuff will work because it's based on how the market's going to book price regardless. Regardless if GAN supposedly said it was going to go up, regardless if Elliott Wave stuff supposedly it's going to cause it to go higher, anything out there. Any school of thought, Wyckoff, whatever. If any of those things are applied and they agree with what I'm teaching, how the price is going to deliver, then that's the times it's going to work. How do I know that? Because it's exactly what I did with my journals. I went back and looked at all the times that I was losing, and every single, not a few times, every single losing trade I took in the 90s as a 20-year-old was against this logic. And it's shocking. It's like, what the hell? I had no chance. I had zero chance. And then you wonder why some of you, most of you, when you first start trying to trade, it feels like it's impossible. Like, nobody can win this. Like, how can anybody win? And then you see me out there executing, and it's like, what the hell? This guy has got to have daily data. He's got to have delayed data. And because we've been live streaming this entire time for the last 7 weeks or plus, you see that I can call every move that's happening. And when they're not good moves, I'll tell you they're not good moves. And they're not. And then I tell you, okay, now it's a good move. And then it happens. You blend that with what I've done in transactions and recorded trades. It's a farce to believe that I'm doing 15 screens being recorded and picking the right one. How the hell am I going to be able to manage all that stuff and annotate all those charts if I was just doing just two? I can't do it. My attention span's too small. Like I get easily distracted. I wouldn't be able to do that. You're giving me too much credit for shit. I just know how to do it. And you're witnessing it now. But it should be no surprise as to why you're failing. If you understand what I'm teaching, you're going to see why you failed. Because it goes against what I'm teaching you. And how the markets book price, how the market makers deliver price through a mechanism that we collectively call the algorithm. That's a price engine. A price engine is simply a script that when prices trade to a specific price at a specific time, it triggers a speed mechanism that causes the market to spool. It means it starts offering price higher or lower consistently with very little retracements. It just keeps going in one direction. That is a macro. That is the time element that is in my time and price theory. That shit is not in Larry Williams' book. That shit is in no other book. Okay? It's not. It's based on very specific algorithmic principles that you're only learning because I've talked about it. Nobody's ever paid any attention that the 10 minutes before the top of the hour and the 10 minutes after the top of the hour, that's going to cause a run for liquidity or into an inefficiency. It's never made its way into a book. It's never left the lips of any teacher, mentor, or trader that's trying to explain their method. It's never happened. That's never, ever happened before. And when I see this campaign that's being leveled against me, I don't know it's certain that it's probably really a commercial grade approach that's being orchestrated now because it's happening a lot. You're getting a lot more people talking about it. But if you understand what they're saying, it's flying in the face of what you're witnessing real time. Who are you going to believe? And that's because this information is not supposed to be in your hands. So there's going to be misinformation campaigns produced as we go forward. And you're going to be the witnesses that were here. You saw it happen. You saw me calling it. You saw me executing in it. You saw all of it. You saw me talk about where the market was going to go on a daily chart, and then days later, it does it. So I'm canceling all the delayed data there too. So how many times does someone have to prove that they're not lucky, but they're precise, and they know something that you and nobody else knows? I leave that question to you as the viewers and the listeners. You have to determine at what point does it become obvious. At some point, if you pay enough attention, it's going to come to a threshold where it's beyond any doubt that these markets are controlled, and I know something about that than nobody else knows. And I'm always ahead of everybody else. I'm always aware of what's going to happen before everyone else. And I have students that have learned from me, and they can trade just excellent. They know what they're looking for, and it's such a pleasure as a teacher to see them doing that. I'm proud to see that. I love that. Sometimes it's emotional because I can see them typing out like I type out, and I can feel what they're feeling as they're typing out, and then it's like, oh, that's be random, because I know what they're thinking at the same time. Like, wow, man, like this shit is the real deal, right? And now you're the real deal. It's not just me is the real deal. You're the real deal. When you can do this in your own hands, it's empowering. No one can talk shit to you and have any effect. No one can dismantle you and say that you're not a good trader because you can do it. And nothing's going to change it. The algorithm's not going to change. The markets are not going to change. These same asshats that come in here and try to disrupt you and scare you and just remove your interest in learning how to do this and make you doubt, you're going to give these individuals that you don't know the influence, the power to take something from you that could change your entire legacy. Leave me a comment if you believe that that's what you should do. If you have any belief that anyone can come forward on social media and tell you what you're trying to learn is not right for you, tell me if you have given permission for anybody to do that, you say so right now. If you don't give anybody permission, then say so too. Say, fuck no one's convincing me that this ain't right for me. I am in the right now, right place, and I'm listening to the person that's teaching me correctly for free, and I can see it happening on my own. I don't need anybody else to help me be convinced of it. I can see it happening. You know people that's already doing it with real money. They're bringing the receipts constantly. You should be encouraged. It's astonishing to me. Like I wish this was available back when I was learning how to trade. The ability to be around other people doing it, not just the guy talking about it. Because if it was just me doing it and nobody else was ever able to replicate it, if they couldn't get in those trades that I outlined, and every individual mentorship I've given them an approach to trading, a model, individual, unique of itself. I could do that every fucking day for years, and the models would never, ever overlap. Try that one on for size. Telling you, I don't ever run out of fucking shit. I got stuff that you ain't never seen before. But I have to pick and curate the ones that I believe that takes the least amount of effort, that's visually spots the setups that you can see it easily. It's not as obscure as some of the other ones I have. So as a teacher, I try to present these things for my kids because I know if I was asked, at gunpoint, which one's the easiest one? Fuck the rest of your shit in ICT. What is it? It's the ones I produced and shared openly and publicly. They're the easiest ones. I have extremely articulate models that are all going to be automated, really. They're buying and selling all day long. All day long, baby. Up, down, up, down, up, down, up, down. And they're capitalizing on every minor fluctuation between a 1 minute and 15-second chart. Up, down, up, down, up, down, up, down, up, down. You'll never see that. I'll never divulge that, and I'll never share it with anybody. You don't need that. What I've already shared is enough. I've given you the first presented fair value gap of the 9:30 to 10 o'clock. That is absolutely the death nail in retail. Like, that's it. It's over for all of you now. None of your shit's going to be able to live up to that. None of it. They can't hide it from you. How are they going to hide that first fair value gap from you? They're not going to. Does your chart ever change in the later part of the day? Like, whatever the 1 minute charts we're doing in the first 30 minutes, have you ever noticed that they're different later on in the day? Fuck no, they're not different. They're the same fucking candlesticks. So they're not hiding it from you. They cannot hide it from you. It's impossible. You're worried about the shit that doesn't matter. And that just proves you're an infant in this. And I can't help but get pissed off and animated when I see the same questions, or the questions that I just addressed and answered in the same live stream just on Friday. Could you tell me about the first presented fair value gap and when can you use it? What the fuck? Dude, I just taught that. Like, I just taught it. This proves that you're not taking notes. You're not even paying attention. And that video is only an hour. Like, it's nuts. And this is the same shit that people that paid me to be mentored, they would say the same shit. I would teach a lesson. Prove it in the price action. And they'd say, could you teach me about so-and-so, so-and-so? What the fuck did you just not watch? What did you just see? What were you watching? The fucking Flintstones? Literally, I just did this very thing. You don't show me your notes. Well, I didn't take any notes. What the fuck was you doing the time the lecture was on? But you want to be a consistently profitable trader. You think that you're going to be, with that bullshit, with that method of engaging and studying, you think that that's appropriate? That you're going to somehow beat the smartest people in the fucking world in these financial markets with that level of give a fuck because it's too low. You aren't putting out enough. You're not putting into this what's required. If you're not really diligent about taking notes and writing down questions that come up in mind when you're watching lectures, because they're going to get answered in the next future ones. That's how it works. If you're not willing to do that, stop wasting your fucking time here. Go watch somebody else. Because I'm teaching winners. I'm making millionaires. I am not trading, and I'm not producing traders that just go out here and play Mickey Mouse in funded accounts, getting a payout here and there. I'm making fucking millionaires. If you're not trying to be a millionaire, you're in the wrong fucking clubhouse. Get the fuck out of here. Mickey Mouse ain't here. This is the real shit. This is the real shit. This is how the markets book. This is what will beat everybody else's shit. And I'm proving it. I'm laying it out there all the time. The gauntlet's always fucking laid down. And not one Charlie fucking Brown comes here. Not one motherfucker does it. Why? Because they abso-fucking-lutely know that I would nail their fucking ass to the wall. Leaving them broke, hanging there, naked and fucking ashamed. That's exactly what the fuck would happen. And they know it. Nobody in their right fucking mind that couldn't do what I'm able to fucking do would got here and bark as much as I fucking bark and watch everybody have their Velcro balls drop the fuck off in public. That's exactly what happens all the time. Who the fuck's Alpha? Where the fuck is he at? You're listening to him. You're fucking listening to him. And every single one of you can have that same fucking energy, knowing that ain't a motherfucker can step to you. No one can outtrade you. No one can come touch anything that you can do. You can outperform every fucking body. I've given those skills to you. They're all on that YouTube channel right fucking now. What are you doing with it? Are you Netflix and chilling fucking ICT? Because if that's what you're doing, you're not doing it right. You gotta have a fucking pencil and a fucking pad that you're writing down shit. And that first time you wrote those notes, that's just your first draft. You need to spend time with that for a week and go back over that and think, okay, was there anything else that I just didn't pick up on, but now it's in second thought about it. Let me go into these notes and see, yeah, I think I understand what he was doing now. Then that final draft, that goes into your real study journal. That's the one that you treasure. That's the one you put a little bit of money behind. Not these little Mead notebooks. They're good for initial draft notes. But just simply scribbling down whatever I said, that's not taking notes. What I'm saying, how does that resonate with you? When I say the first presented fair value gap between 9:30 and 10 o'clock, that's important because that inefficiency will be used in the future, not just today. What does that mean? How can I prove that? What am I going to do now when I'm done watching this lecture that I can go out there and start looking for what he means by that? I need to test that theory. I don't want to take his word for it. What are you doing with it? Because if you're just simply writing down the notes and then waiting for the next lecture or watching the next video that's in the stream or on the playlist, you're not doing it right. Unless you're going into your charts looking for the very things that I'm describing, you're not going to have that hook in your jaw that keeps you at it. You're going to be looking for the next thing I talk about, the next little buzzword, the next little thing, these little interesting shiny object syndrome. I'm going to flash something in front of you, and you're going to forget everything else you've been introduced to, but never done any work to make yourself understanding that better. The difference between you and the people that are my students that are making money is they didn't fuck around. They took notes, they dug into the charts, and they saw it for themselves. They logged their own examples. They recorded it, and they annotated it. That's back testing.
That is not sitting there watching market replay paint the fucking candles. Back testing is simply looking at the old charts that's static. Market replay is not going to teach you shit. It's not going to teach you anything. That price, when that candle is creating, it's only two changes. When it first prints, and then it does the final settlement. The next candle opens up, gives you first print. It's not even really the first print. It's a little bit of movement on the price action candlestick, and then boom, it gives you the next one at the settlement. That is not how you learn how to read price action. If you are using market replay, you are stunting your growth. If you're listening to mentors that only teach through market replay, you are wasting your fucking time and your money. These clowns don't know what the fuck they're doing. Because if they knew what they were doing, they'd be in a live stream setting, calling the individual market, trading the individual market, calling it with a stop loss that's fucking ultra tight, and tell you straight up this is what it's going to do, and watch it happen. That's what they would be doing. But they don't do that shit because it's unsafe for their business model, because they need more money coming in monthly fucking payments. Sorry, Jack. But that shit just doesn't work anymore. You gotta be out here doing it. If you're not a fucking doer, you're a screwer. And you're screwing over the fucking people that's paying you, and you can't prove that you know something. If you're gonna monetize it, you better damn well be able to fucking do it. If you can't fucking do it, I'm the sounding board you bounce everybody off of, because I'll out-trade every fucking one of them and have fun fucking doing it. It's closing fucking time, motherfuckers. It's closing time. Or it's time for you to step up and say, you know what? You're right, ICT. I'm going to do that. It's the least I could do for my own image, my own brand. Let me go out there and set myself apart from the rest of these yahoos. How many are doing that? How many are going to be doing that this week or in the future soon? They're not. They're fucking not doing that. But they're going to stay in market replay. They're going to stay in hindsight discussions and examples where it's safe. That's a sandbox. There's appropriate times for that, yes. But at some point, and the point is we're at the point of no return. Nobody else can now stand out there and teach from a hindsight perspective. That shit's gone. The golden era of milking subscribers is fucking gone. You earn your fucking money. You earn it. You prove that you can do it. You prove that you're a mentor. Because if you're not able to do it in your own hands, you ain't a fucking mentor. You are a fraud. You are a con artist. You are a fucking faker. You're a poser boy. That hurt your feelings? You right now creating sock puppet accounts so you can say some shit about me? Go ahead. You ain't changing the fact that I'm proving it. You ain't changing the fact that I'm making millionaire students. Hello. Somebody just leaned over and said, damn, this motherfucker's on fire today. Yep. I would have had a whole lot more energy yesterday. I was ready to go. I'm a little tired today, to be honest with you. Might not seem like it, but I am. I'm a little tired. Might be my age. 52 is kicking in, isn't it? But that's why you lose, and that's the secrets of how the market makers operate and deliver price. And there's other subtleties that I'll teach and have already taught for real on my YouTube channel. And it's important for you to be organized with your note-taking. Anytime that you have something that comes up as a concern or that you hear me say something, your notes should have the title of the video or lecture and the minute marker where that question was anchored to. Like what I said, you should write what I said that causes you concern, doubt, or a question about it. So that way you can go back when you think you figured out what that question was when you go through it at the end of the week or you reflect in the previous month. How often are you going back to your old journal entries? Because it's not one and done, forget about it. Like you got to go back and see. Oh yeah, I remember I had that question, but I stopped worrying about that because he keeps producing new content. It's easy to get lost in the minutia. It's really easy to get bogged down with this. So it's a lot. Like it's a lot. I'm condensing a PhD amount of time that you would go through college courses to get a PhD. I'm compressing all that stuff down into a very small lecture. And that's why it feels like drinking from a fire hose. It'll rip your fucking face off. And it's like, this is too complicated. It's not complicated. It's a lot of stuff that you have to manage. But I'm telling you how to manage it and how to go through it appropriately. Slow, modularly, and give yourself the real effort to see yourself succeed in that. And don't listen to outside influences. And if that makes it feel like you're a part of a cult, great. It's a private club. They're not invited. Everybody else can talk shit. That doesn't change anything. When you're making money and you quit your fucking job and you're able to pay for a house with cash and it doesn't change anything because you know you can make that same amount of money in another 4 weeks, you're just going to give a fuck about anybody else's opinion about me or you. You're not going to care about that stuff. You're going to be too busy living. You're going to be too busy enjoying your life, period. And that's what this is about. It's not about worshiping me. It's not about hanging on by every thread of what I say, because this is all going to stop soon. Okay, I'm not going to be making videos. I want to go back to what I was doing over the summer. I want to just relax, and I enjoyed it. But I love teaching, and when I feel that I've given my son Caleb enough, I'll stop until he gets to the point where he needs more. Then I'll do some more. But I don't want to keep doing this. That's not what I'm here for. I don't care to keep doing this. Like, I've already taught. I've made profitable students. I've left a legacy of lifetime understanding on that YouTube channel. And I'm here talking to you right now, not monetized at all. I'm not making any money, and I'm giving permission for people to take these and put them on their own YouTube channel. That's a gift. That's me being who I am. And my only inspiration outside of my own sons and my daughter ever learning how to do this is that anybody that would put their nose to the grind about trying to learn how to do it as well, that they listen to the person that created it. Listen to the person that authored it. You're going to get the subtle nuances that you won't get from 5-minute trainers selling my shit for $5,000 when I didn't even sell my own shit for $5,000. That's teaching it correctly, not incorrectly. And you don't have to pay for it. And you have the resources on a YouTube channel you can always tap into. You can leave little notes on the video, and no one else sees it but you. Because I have every one of my comments set to hold for review. That means that you can comment to me, I can see it. As long as it's not a rude remark or anything like that, it'll stay there and you'll see it on your end. But it'll look like nobody else has commented but you. That means you can use these videos as your own little study journal and leave little minute markers. So that way if you want to go back to that video, you say, oh yeah, there's where I was with that. Let me just boom. Or if you get to a part where you got to only a percentage of the video, you couldn't complete it, just put down the minute marker, you stop that, and put that number in the comment section. And then when you go back to that comment, if you click it, it'll take you right to that minute marker, and you can pick up where you left off at. I'm not going to delete it. It's not bothering me. So you'll see it. Nobody else gets to see it. And you can manage your progress through each one of the mentorship playlists or videos. Like, I've made it as easy as I could and for free. I'm not going to delete the videos. I'm not going to take them down. I'm not doing a future paid mentorship, so there's no reason for you to be, well, I'm going to go and wait for his next paid mentorship. There's no paid mentorship. I don't want to do that. Like, it's too much to worry about all that shit. And whatever I taught there would just get leaked. So I might as well just keep doing everything public. So everybody has the same thing and nobody needs to pay for nothing. Stop buying my stuff because it's already on the YouTube channel. You're stupid if you're paying for it. So, and you can't buy your way into my private mentorship because the charter members that are there, they are part of a community that will never increase. I am able to talk to these people because they know my stuff. I'm not always talking about markets. Sometimes I'll talk about weird shit in the world and stuff, and I just don't want those perspectives out in the world, in circulation. Like, I feel comfortable and I feel safe in that community talking about those things. But you don't deserve to be there. You can't pay to be there, and it's not what you think. Once in a blue moon, I'll go in there and I'll call the market and call it out loud, and we trade it. But it's not happening as a steady diet. So there's nearly no inspiration for you to want to do it. It's just a safe place for me to talk to students that I can trust. They understand what I'm saying. Versus if I say something like on a Twitter space, who knows how it's going to be interpreted. If I say it on my YouTube channel, who knows how it's going to be interpreted. But they've been spending enough time with me. They know who I am. They know my personality. They know what my concerns are for them as the community. And I believe that this year, when we finally complete the last presentation for the 2024 mentorship, that you will be equipped with information and procedures that will allow you to go out there and find what you're looking for efficiently and faster than you probably were afraid it was going to take. But for some of you that don't get there as fast as you want it to happen, the best advice I can give you is just don't stop. It's easy to let the problems of the world right now, because everything's expensive, everything is scary and stressful, and it's hard right now. The only thing you're going to do is prolong the amount of time it's going to take for you to get to that by panicking or trying to rush through it. I promise you that if you just relax and let it just be a hobby and fun to study, make that a pastime. When you're backtesting, put some music on, something that you like listening to, and study. Just relax and find pleasure in looking for these repeating things that happen in price action. And then you do your annotations and journal them all up, and then put them in your place where you save all that. I don't know what that would be, but however you save it, there it is. For some of you, it could be PowerPoint. Others, it could be, I don't know the name of that little thing that they sold. I can't recall what it was, but it was a nice little, it's notation. I don't know. It sounds like it's right, but it probably isn't. But it's something like that, where one of the female students of mine, she was actually journaling all of her stuff with that, and I thought it was actually neat. But it has to be something you can search. My journals, I've been doing it for such a long time, I don't have the ability to do search. And that's the only thing I wish I could have done for that. That reason alone is so I can search something by keyword and find the journal entry. Like if I want to go back and look at crude oil trades I did in the 90s, it would be able to sort out all the trades I did with the crude oil, and I could find the one I'm thinking of by memory, but I can't recall by date. If you do things electronically, you'll have the benefit of doing that. If you're like me, where it's high touch over high tech, I'm limited in my ability to scan and search for things and go right to it. But I'm not constantly going back into my journals. You are developing students, so that's advantageous for you to have that resource. And going forward, when you have years and years of it behind you, you'll still have that added benefit that I don't have as a mentor with journals. Mine's all written out with pen. But anyway, I enjoyed spending some time with you today. I talked about some things that hopefully will help you go forward this week. And I want to leave you with a couple questions. That way you go forward with these in mind. I want you to think about how you feel about the day before it starts trading. What you think it's going to do. Is it going to be an up close day? It's going to be a down close day. And you're not trying to predict the closing price. You're just writing down what you think about the day. And then I want you to write down why you believe what you believe. I want you to write down how you think that the session that ends the morning session. Okay, so we'll call it 11:30 to 12 o'clock in that 30-minute interval. You want to be simple, do it like I told Caleb. 11:30 is the end of your morning session. So at 11:30, will the closing price that makes the 11:30 1-minute candle be higher than the 9:30 opening price or below it? I want you to ask yourself what you think that's going to occur. You have to determine that at 10 o'clock. So at 10 o'clock, the opening range completes. Now you have 30 minutes behind you. Are we going to close higher at 11:30's 1-minute candle than the 9:30 opening price or lower? And why you think that's going to be the case. And I want you to do the same thing for if you have an interest in the PM session. If you never want to be trading the PM session, then don't do this. But if you want to do it for extra credit and just as a process of improving your ability to anticipate price action, you're going to be doing the same thing. At 1:30, that starts the PM session. Between 1:30 and 2 o'clock, in that 30-minute interval, I want you to think about, are you going to see the opening price at 2 o'clock on that 1-minute candle at 2 o'clock Eastern time? Are we going to close at 4 o'clock above that price or below? And how and why you came to that conclusion. And I want you to do that every single day this week. And then we'll talk about that next weekend. Until I talk to you tomorrow in live stream on YouTube. I will be live streaming at 9:20-ish, something like that, a couple minutes before 9:30. Until I talk to you then, Lord willing, be safe.